Good morning, friends. Indirect Tax Committee, PSD Chamber of Commerce, welcome each one of you for this important webinar on recent changes in GST law and legal jurisprudence. Can I get the confirmation from all the participants? Am I audible and visible clearly? Connection is okay? If you can just write back in the chat box that you can see me and I'm audible and visible both together.
Yes, sir. Coming perfect.
Perfect. Okay. All right. All right. So without taking much time, let me start. I'm going to make theme presentation that what we are going to discuss today. There are so many changes we have seen recently in GST law, and we have seen number of judgment, divergent perspective. So we are going to discuss each of the component, 3-hour webinar, 5 learned speakers, going to talk about different topic. So I'm sure you're all going to be benefited in terms of all recent changes. What are those changes and implication on our business day in, day out? In my theme presentation, I divided into 5 category, 5 bucket. I'm going to discuss first what are the important. I'm just going to highlight the important one. Detailed presentation to be made by all learned speaker. First category would be important change pertaining to outward supply. Second, on input tax credit. Third, on registration, GST registration, lot many fake registration, fake credit, and there was special all India drive. So we are going to discuss what all changes are being made in GST law pertaining to registration. Fourth, there is important changes even in GST compliances when we talk about GSTR 1, 2B, and 3B. And last, I'm going to discuss some of the important changes under miscellaneous category. And then what are some of the judgment which I will highlight for each one of you, which would be talking about important legal jurisprudence. So let me start with, just give me a minute only. Let me start my theme presentation first on outward supply. Under section 10, subsection 1, clause CA got introduced under IGST Act, and it is now notified from 1st of October 2023. What is this change? When we do B2C supply over the counter, we have seen generally what we follow. We invoice to the customer who are not registered as intrastate. But GST is a destination-based consumption tax. It must accrue to the destination and consuming state. Keeping this context in mind, clause CA got introduced under section 10, subsection 1 of IGST Act. Now, supplier need to mention name and address of the recipient while raising the invoice to the customer. And just to recall, there's Rule 46 Sub-Rule E of CGST Rule 2017 already there, that if taxable value of supply is more than 50,000, then supplier must furnish name, address, and state code of the recipient state, so that the chargeability, if any customer coming from Maharashtra to Delhi and daily supplier aging invoice B2C over the counter value is more than 50,000, then quite obvious as per these changes, as per the rule which was there. Now 10(1)(ca) got introduced under IGST Act effective from 1st October 2023. It is IGST cell. So that SGST component of IGST must accrue to the state of Maharashtra. First part. Second, as a supplier, we are filing GSTR1 and GSTR3B. GSTR1 is outward supply and our outward supply liability, corresponding liability. Sometime when we are filing one, we did some mistake. Let's say liability was only 1 lakh rupees, but by mistake, unintentional, it is shown as a 10 lakh rupees. Quite obvious, when you are making payment through 3B, you are going to pay only 1 lakh rupees. So there would be difference in GSTR1 versus GSTR3B. What is now going to happen? Wake up call. Rule 88C got introduced from 26 December 2022. And what this rule is saying, now you will get notice in part A, DRC 01B from the department for difference of liability in 1 versus 3B, part A, rule 88C. Now you need to reply back. Either you pay the differential amount, which is coming from 1 versus 3B, or you should reply back, and that time period specified is only 7 days, part B of DRC 01B. So it is worth noticing. And further, Rule 142B again got notified from 4th of August 2023. And as per this rule, if there is difference, and this difference is neither paid by you, and nor you have replied in part B of DRC 01B, as stated in Rule 88C, then department can initiate recovery proceedings. Why DRC 01D? Please be careful. And this recovery can be made under Section 79 of CGST Act, even without issuance of so-called notice, either under Section 73, non-fraud case, or Section 74, fraud case. So this is alarming provision for all of us together. Otherwise, you have to keep in your mind, which is very important. Sometimes there is clerical mistake, genuine mistake we have done. It was not intentional. Then you should not require to worry about. But you should reply back within 7 days once you get notice in part A of DRC 01B. And those who are habitual offender, they used to file one with the higher amount to pass on the credit to the recipient, and paying lower taxes like 1 lakh through 3B. For them, it is alarming. And it is self-assessment tax, believe me, under Section 75, subsection 12, explanation. And that can be recovered even without issuance of so-called notice. Wake up call for all of us together. So those who are habitual offender must stop, otherwise recovery proceedings. If you are making a genuine mistake, window is open for you to reply back. Otherwise, also under Section 37, any rectification for any omission or error can be done till 30th November. So that period is also open to you. This is pertaining to outward supply. Coming back to GST input tax credit, second category. I'm discussing only important one. Detailed presentation will follow by the technical speaker and expert. In ITC, we are finding many disputes coming out. We started with the 4 conditions, right? Having tax invoice, recipient and buyer having tax invoice, received goods and services, supplier must have paid taxes, and as a recipient, you are filing your return under section 39. Fifth condition got introduced that credit availed in 3B must be matched with GSTR 2B. And sixth condition is there specified restriction, and sixth restriction got specified under section 38 effective from 1st of October 2022. But what is the change? Rule 88D got notified from 4th of August 2023. And what is this Rule 88D? If credit availed in 3B is not matching with GSTR 2B, then you will get the notice. Part A, DRC 01C, you will get the notice. And you need to reply back within 7 days. So there are two options. Either you pay the differential amount, 2B versus 3B, or you should reply back within 7 days. If you are not replying back, then demand proceedings going to be initiated under section 73 and 74. So law is getting strengthened day by day. So it is wake up call, and we have to be careful about whenever you get notice, and if you have made mistake, then you must reply back. That is what important to adhere. And these webinars are going to give you hand holding what all day in, day out activities need to be compliant with. Having said that, one important laudable one, under section 50 subsection 3, you are aware that if you avail the credit, wrongly avail the credit and not utilized, then no interest going to be charged. We all are aware, and that too with retrospective date July 1, 2017. So there were certain issues for this. A circular number 192 dated 17 July 2023 got issued, and what it is saying, let's say you availed wrong IGST credit, wrongly availed and utilized for the reason because there is an order of utilization. First, you need to exhaust your IGST credit. Thereby, you have utilized this wrongly availed IGST credit. But at the same time, you are having enough balance, sum total of IGST credit, CGST credit, and SGST credit. It's much more higher than the amount utilized. Then this supplier, this taxable person was saying to the government, see, my sum total is always higher than the amount utilized. This is as good as I have not utilized wrongly availed credit. Hence, no interest leviable. And secondly, if I'm utilizing IGST credit, which is wrongly availed, it is because of order of utilization, which is being prescribed. So intentionally, I'm not utilizing. And secondly, I'm having enough balance lying to my e-credit ledger, sum total of IGST, CGST, and SGST. Then no interest should be leviable. It is now being clarified, no interest. No interest. There may be a case you have availed a wrong CGST credit and utilized. Then you can look at the balance of IGST and CGST should be much higher than the amount utilized. There may be a case wrong SGST credit availed and utilized. Then you should look at sum total of IGST and SGST. So this is what we have to know and we have to keep in our mind. Having said that, just one more clarity. If credit wrongly availed and utilized, and your sum total is lesser then to that extent of amount utilized from date of utilization, interest is leviable and rate of interest going to be 18% per annum. That too retrospectively from July 1, 2017. This is a bucket on GST input tax credit. Coming back to registration. We have seen a lot many fake registration in GST regime. There was special drive also, All India special drive. There are certain changes made in the law, which is worth noticing now. Rule 10A. Now, there would be compulsorily furnishing of bank account details within 30 days from the date of registration granted or date of furnishing GSTR1 or through invoice furnishing facility, whichever is earlier. And why government is intending that you should furnish your bank account details? Quite obvious, you may have opened more than one account. And in more than one account, you may be receiving money which is not accounted for. So government is intending you should furnish your bank account details. And thereby they would be catch holding whether all receipt which is coming in a bank account, it's correspondingly mentioned in your liability, GSTR 1 and 3B. And even income tax, you must be aware of that they are also capturing these data. So day by day, we are moving towards organized sector, which is worthwhile, appreciated, laudable one. We have to done away, we have to remove all unscrupulous person from our ecosystem. If you're a proprietorship firm, you need to now link your PAN card with the Aadhaar card also. This is the need of Rule 10A. Subsequently, amendment is also made in Rule 21A. They are saying if you're not furnishing bank account details within specified time, there would be automatic system-based suspension of GST registration. Automatic system-based. Once you submit the details, which is required as per Rule 10A, then there would be automatic system-based revocation also. Rule 21A. Next amendment they have made in Rule 9, read with Rule 25. And now they are saying, now it is not compulsorily to have presence of a registered person or the applicant who is applying for GST registration. His physical presence is not required. Whenever department is coming for verification, physical verification in high risk cases. So they have done away the Delhi High Court judgment and they have made corresponding amendment in the rule. No compulsorily presence of that registered person or applicant. So you have to be careful where you are taking registration, that must exist. And this provision is only envisaged to detect who are non-existent. So this is change pertaining to registration. Coming back to the compliances. We have seen in GST lot many non-compliances on the part of supplier. And because of non-compliances by the supplier, it's creating problem hurdles for the recipient to avail credit. Sometimes supplier is filing one, but not paying the tax to 3B. Sometimes filing one, but he is not furnishing proper details like B2B as a B2B, correct GST number, correct place of supply. Sometimes he is paying the tax through 3B, but not filing one. Lot many challenges for the recipient, and now credit need to be matched with GSTR 2B. So if supplier is non-compliant, then credit it gets impacted in the hands of recipient. And you must be knowing two-way communication, which was existing, is being omitted from 1st October 2022. We all are aware of. Now, having said that, what all changes are being made in the GST law worth noticing? we have to really know all these changes. First, Rule 59, Sub-Rule 6. There are 4 important changes. You cannot file GSTR1. Listen very carefully. You cannot file GSTR1 if you have not filed GSTR3B for your preceding tax period. So if at all for September you want to file GSTR1, you need to ensure that for August month you have filed your GSTR3B and paid the taxes. Second, Rule 88C, which I have already referred, is not complied with. 1 versus 3B differences. You are getting notice Part A DRC 01B. If you have not paid the taxes or replied within 7 days, maybe a region your GSTR1 going to be blocked for subsequent tax period. Next, Rule 88D, difference of credit in 3B versus 2B. You will get notice DRC 01C. You need to pay difference or reply. If you don't do, then your GSTR1 going to be blocked for subsequent tax period. Rule 10A changes like non-furnishing of bank account details within specified time period may be the region. Your GSTR1 going to be blocked for subsequent tax period. So wake up call. And this one is being filed. Second, 75 subsection 12 explanation. I've said that while filing one, you need to be careful about. If there is a genuine mistake, you can always reply back. But those who are habitual offender, always having difference of 1 versus 3B, for them alarming call, 1 versus 3B, difference is going to be self-assessment tax. And that can be recovered without issuance of so-called notice under Rule 142B, read with Rule 88C, as referred under Section 75, subsection 12, explanation. 37. If you want to file your GSTR1 for the current tax period, you need to ensure you have filed your GSTR1 for the preceding tax period. Quite obvious, those who were not filing GSTR1 was not getting auto-populated in 2A, 2B of the recipient. So this is going to be done away with. Second change, which is under Section 37, time limit is now being prescribed for 3 years for belated GSTR1 return filing. 3 years from the due date of furnishing, maximum 3 years time period prescribed for filing belated GSTR1 for the past period. And this change is coming from Finance Act 2023, effective from 1st of October 2023. Coming back to 39. If you want to file 3B for the current tax period, you need to ensure you're first filing GSTR1. And these changes from 1st October 2022. What is new change from 1st October 2023? That 3 years time limit now for belated 3B, belated 3B. But you have to keep in mind time limit condition of Section 16, subsection 4. Just because you can file your belated 3B does not mean that you can avail credit in contravention of Section 16, subsection 4. So it is really wake up, an important one. Section 44, annual return, including self-certified reconciliation statement 9 and 9C. 9A for the composition dealer, 9B for the e-commerce operator. Time limit prescribed 3 years for the belated 9, 9A, 9B, and 9C from the due date of furnishing such return. Please keep these deadline in your mind for the compliances in GST law. Having said, I am now touching a miscellaneous provision, important one. And quickly, I will take 10 minutes to summarize my presentation. The first change. GTA, Goods Transport Agency, having option either to follow forward charge or reverse charge. So they have to opt for it. And time period prescribed was 15th March in the preceding financial year. Now that would be 31st March. And this window gets open from 1st January of preceding financial year. Second important change, once you opt for a particular method, let's say forward charge, it will continue till the time you want to change your method. So you need not require to make a declaration on year basis unless you change your option. Second, director, we are always debating and having confusion. I do not know for what reason, but let me clarify once again. If any remuneration paid to the director in the capacity of director providing services to a body corporate or company, then that is subject to RCM in the hands of body corporate or company by notification number 13/2017. So what is not under reverse charge? First, if director is employed as a employee, even though designated as a director, whole-time director, but he's drawing salary, and salary is subject to deduction of TDS under section 192, then no reverse charge. Second, if director is providing certain services which is not in the capacity of director, and prominent example could be director is letting out his commercial property to the body corporate or to the company, commercial property letting out. That is not in the capacity of director. So that is not subject to RCM. It is under forward charge method. And that is what director has to look at his aggregate turnover for getting registration and raising invoice to the company with GST. So more than 20 lakh rupees registration is required. Third, when you go to a cinema hall now and you buy certain food and beverages, GST going to be levied at the rate of 5% with no ITC as a restaurant services. You have to only keep in mind if such cinema hall is raising a ticket including food and beverages and not bifurcated separately, then that is going to be composite supply. So if it is more than 100 rupees per ticket, then 18% GST. So this caution is there. It needs to be bifurcated, or separately you're purchasing food and beverages in a cinema hall, 5% with no ITC. And it is clarified by circular number 201, both director and this food and beverages 201 dated 1st August 2023. Fourth one, the important and much talked about horse race, casino, and online gaming. Online gaming, the bifurcation of game of chance versus game of skill is being done away with. 28% GST. Corresponding amendment is being made in CGST and IGST by CGST Amendment Bill and IGST Amendment Bill 2023, effective from 1st October 2023, as stated in 51st GST Council meeting, and that too on full face value. So I'm not discussing much, leaving it for the speaker to talk about. But this is much talked about in recent time. What happened for the online gaming? What happened? Online gaming is situated outside India and providing services to the consumer who are not registered. What happened to that? What would be the valuation when we look at casino and online gaming? What happened for the crypto, Bitcoin? Lot many things. So I'm leaving it to the speaker to talk about. Going further, there was an amnesty scheme prescribed for non-filer of GSTR 4, 9, 10, and revocation of cancelled GST registration. And then base judgment order under section 62 of CGST Act. Time period is extended to 31st August 2023. Having said, the next change, which is important one, that exemption not to file exemption from filing of GSTR 9 annual return. So no need to file 9. If you are a registered person and your aggregate turnover up to 2 crore for financial year 22-23 and due date is 31st December 2023. Having said the next change, which is important one, ISD versus cross charge. A circular number 199, worth reading. Kindly run through. This circular is clarifying following conditions. There are certain point which is very, very important. When ISD going to be applicable? Input service distributor, which is meant for third-party services received by HO for the recipient unit. So for the past period, there was dispute that some person has taken ISD registration, some person has not taken ISD registration, but raising invoice as a supplier of service. This is being clarified when you need to have ISD registration. So whenever you're procuring third-party services, let's say at HO, which is meant for your recipient unit for different distinct person, then ISD registration is being referred. Cross-charge in terms of entry to Schedule 1, supply of services between distinct person, HO to branch or branch to HO, and dispute was what would be the valuation. Second proviso of Rule 28, clearly talking about if recipient is entitled for full ITC, then supplier can pick up any value and that would be deemed open market value. And dispute watch, which was envisaged, dispute watch, the salary need to be included for all the CEO, CFO. This circular has clarified for application of second proviso of Rule 28. Now you need not require to worry. Whatever value picked up by supplier would be deemed open market value and no need to include salary cost. Even there's no need to include salary cost, the recipient is not entitled for full ITC, then second proviso of Rule 28 is not applicable. You have to bear in your mind. And clarified by circular number 199. Another thing which got clarified, holding of shares of subsidiary company by holding company is not a supply. Circular number 196. Next, they have clarified, and which is important one, for no reversal of ITC for spare parts and components used for in-warranty services, circular number 195. So there are these important changes. Last component, legal jurisprudence, many judgment. And I'm sure speakers are going to touch base. I'm just going to highlight 3 judgments and then sum up my presentation. First, importance of time limit to avail credit as per section 16, subsection 4. Prior to 1st October 2022, provision was earliest of due date of furnishing 3B for the month of September, which is 20th October, following the end of relevant financial year, or date of furnishing annual return. This due date of furnishing return under section 39(3)(b) got replaced by 30th November from 1st October 2022. A recent AP High Court judgment in the case of Thirumalakonda Plywood, they have said the provision under section 16 subsection 4 is not violative of Article 14, 19(1)(g) and Article 300 capital A. And it is not contradictory when we look at section 16 subsection 2 starting with non-obstante clause. Second judgment coming from Patna High Court, Asta Enterprises, section 16 subsection 2 clause C. If supplier fails to pay the tax even after collecting the tax from the recipient, from the buyer, from the purchasing dealer, credit would be denied to the purchasing dealer. This is important judgment and hue and cry in a market. It says double penalty on recipient, purchasing dealer. You have paid the amount to the supplier and your credit is being denied. Section 16 subsection 2 clause C, but it has got many angles to look at. You need to look at section 41 subsection 2. You have to look at Rule 37A. Lot many things. Just I'm giving food for thought. And the last, adherence of time limit to file appeal. Sometime, appeal, under section 107, 3 months plus 1 month condonation maximum. And if we fail to adhere the time limit, then believe me that the Patna High Court judgment in the case of Biswanath Traders, and they have said if you have failed, then you will not be able to file appeal. You will not be able to, when this matter went up to the Supreme Court, Honorable Supreme Court has upheld the Patna High Court judgment. So you need to prove either there are 2 point alternative remedy, right? Alternative remedy. Whether alternative remedy is really a bar, to my mind, is not a bar, provided you prove that there's a violation of fundamental right, principle of natural justice, excess jurisdiction, or bias of the law is being challenged. Or you could not file appeal because your portal was not accepting. There's some problem for which you have communicated. You have got communication document in your hand. So we have to look at fact of each of the case to determine. But having said, I've taken extended time period, but now leaving it my theme presentation here and requesting Mr. Nanda to take it forward, but thanking each one of you, all the participants taking out your time and joining today's webinar on important and recent changes in GST law and legal jurisprudence. Thank you very much.
Thank you, sir. Thank you very much, sir. Now I request to Mr. Chetan Agarwal, CA Chetan Agarwal from Tattam Advisor. He is discussing about the recent changes in GST refund. Please, Chetan ji, kindly show your PPT from your system. You are visible. Your voice is not coming.
Yes, sir. I visible.
Yes. Now coming. Yeah.
So, good morning, everyone. And I also thank you, PSD, for providing me this opportunity. The topic on which I am going to speak today is related to recent changes in GST refunds. In the GST legislation, supply and ITC are the two most important aspects. Besides this, GST is also GST refund is also one of the important aspects under the GST. It is more crucial for the financial flows of the businesses and more particularly for the SMEs. In case department withheld the refund amount or reject the refund claims, it can have adverse impact on the operations of the business of the taxpayers. Though filing of GST return, GST refund claim may appear as a straightforward process. However, actually, when the department files, when the taxpayer files the refund claim, they have to face numerous difficulties and challenges. And this is due to lack of clarity of the legal provisions or because of the frivolous grounds taken by the department. Keeping this in background, I will discuss the topic into 3 parts. Recent clarifications issued by the department, recent legal jurisprudence pertaining to the refund issues, and amendment in the legal provisions. Recently, government has issued certain important clarifications through circular number 197 dated 17/7/2023. Through this circular, the first issue which was clarified through this circular was regarding the eligibility, regarding the linking of eligibility of refund claim with GSTR 2B in case of refund of accumulated ITC on account of zero-rated supply of goods without payment of tax. Earlier, there was no specific provision under the GST law which requires the taxpayers to claim ITC on the basis of invoices which we are reflecting in GSTR 2A of the taxpayer. Therefore, a clarification was issued through circular number 125 of 2019 that refund shall also be available in respect of invoices which are not reflecting in GSTR 2A of the applicant. However, in 2019, Rule 36, Sub-Rule 4 was inserted in the CGST rules, whereby ITC was restricted to the invoices which were appearing in GSTR 2A of the taxpayers. Therefore, a doubt was raised that the earlier circular provides that refunds shall be available in respect of all the invoices, whether the invoice is appearing in GSTR 2A of the applicant or not. However, after the insertion of Rule 36(4), the taxpayer can claim ITC only in respect of the invoices appearing in GSTR 2A. So, this created a deviation between both the provisions. Therefore, it was clarified through circular number 135 that refund of ITC shall be allowed only in respect of those invoices which appears in GSTR 2A of the applicant. Again, with effect from 1st January 2022, Section 16, Clause AA was inserted in Section 16(2) of the CGST Act, and amendment was made in Rule 36(4) of the CGST rules. As per these amendments, the taxpayers were now eligible to take ITC only on the basis of invoices which appears in their GSTR 2B return. If the invoice is not appearing in their GSTR 2B return, they cannot avail the ITC. Considering this amendment, now the department has again provided clarification through this circular number 197 that refund of accumulated ITC shall be restricted only in respect of those invoices which appears in GSTR 2B of the applicant for the said tax period for which the refund is filed, or for any other, or in any previous tax period. So the department has also clarified, because the provisions were made applicable, amendments were made applicable from 1st January 2022, and now already a substantial time period has expired. So the department has clarified that this restriction of claiming refund on the basis of 2B will be applicable in respect of all the refund claims which will be filed for the period January 2022 and onwards. However, in case the refund claim for the period of January 2022 and onwards already processed in case of any taxpayer, then such case shall not be reopened because of the clarification issued by this circular. Therefore, this amendment is to align the refund provisions with the ITC eligibility of ITC provisions. Then second clarification relates to determination of adjusted total turnover mentioned in the formula provided in Rule 89(4) of the CGST rules. Rule 89(4) prescribes the formula to calculate refund amount of accumulated ITC in case of zero-rated supply of goods without payment of tax. As per this said formula, the amount is determined by dividing the zero-rated supply of goods and services by adjusted total turnover and multiplying with the net ITC available during the period of refund claim. Thereafter, an explanation was inserted in the said Rule 89(4) with effect from 5th July 2022 to provide that the value of export of goods out of India shall be lower of the FOB value declared in the shipping bill or bill of export, or the value declared in the tax invoice or bill of supply. While filing the refunds claim, generally the department insists that this explanation is applicable only for the numerator part of this formula. Therefore, if the and it is not applicable for the denominator part, that is for computing the adjusted total turnover for this formula. This resulted in lower refund amount, because the taxpayer has to consider lower of FOB value or the invoice value, whereas for adjusted total turnover, the taxpayer has to consider the higher value. Taxpayer may have to consider the higher value, that is the amount which is declared in the GST return. So now it has been clarified that the value of goods exported out of India, which is required for calculating adjusted total turnover in the above formula, should also be determined as per the said explanation inserted in GST Rule 89(4) of the CGST rules. Then another clarification relates to refund claim filed after compliance of Rule 96A of the CGST rules. A taxpayer can export the goods without payment of tax. The taxpayer can export the goods or services without payment of tax. Rule 96A requires that such taxpayers shall file an annuity or bond to bind himself that he will pay the applicable IGST or along with interest within 15 days from the expiry of 3 months of the date of invoice in case of export of goods, if the goods cannot be exported within such 3 months. And in case of service, the exporter will pay applicable IGST along with interest within 15 days from expiry of 1 year from the date of issue of invoice, if the consideration in the form of convertible foreign exchange or in Indian rupees, wherever allowed by RBI, cannot be realized within such 1 year. So in certain cases, goods cannot be exported or payment cannot be realized within such timelines prescribed under Rule 96 of the CGST rules. Therefore, the exporters may pay this amount in terms of Rule 96A. They pay the IGST liability along with the interest in case of non-compliance of Rule 96A. However, subsequently, it may also happen that the goods exported after payment of tax under Rule 96A, or the consideration is realized in the convertible foreign exchange by the supplier after compliance of Rule 96A. So a doubt was raised regarding the admissibility of refund in such situation. It is clarified through this circular that in this case, the substantive condition of exporting the goods or the condition for a transaction to qualify as export of service in terms of the definition provided in the GST law get fulfilled. Therefore, the substantive benefit of zero-rated supply cannot be denied to the exporters. Accordingly, it is clarified that the exporter is entitled for the refund of unutilized ITC under Section 54(3). The exporter is also entitled for the refund of IGST paid, which is paid in compliance of Rule 96A for non-exporting the goods within the prescribed time limit or for not realizing the export proceeds within the prescribed time limits. But the refund of interest paid in compliance with Rule 96(1) shall not be admissible. It is clarified that the refund application, such refund application can be made under the category of excess payment of tax. However, till the time this facility is not available on the portal, such application can be filed under the category any other on the GST portal. Then the fourth clarification is issued regarding changes in undertaking that is required to be submitted along with the refund application on the GST portal. Government has not implemented, or the department has not implemented the facility for furnishing return in GSTR 2 and GSTR 3 on the GST portal. Therefore, the council decided that refunds shall be allowed on the basis of ITC provisionally accepted in terms of section 41 of the CGST Act. However, the taxpayers or the applicant were also asked to furnish an undertaking that in case it is found subsequently that the supplier has not complied with section 16(2)(c), that is, he has not paid the tax, or provisions of section 42(2) is not complied subsequently after seeking the refund claim, then he shall pay back the refund amount claimed from the department along with applicable interest. Section 42 was omitted through the Finance Act 2022 with effect from 1st October 2022, and also the reference of or the concept of provisional ITC as laid down under section 41 was also removed. Therefore, to align this undertaking with the amended provisions, certain changes has been made in the undertaking, whereby reference of compliance to section 42 is removed from the said undertaking. Now the undertaking provides for payment of tax in case of non-compliance of section 16(2)(c) only. Then coming to the next part of the presentation, recent legal propositions. As we discussed that there are certain many reasons because of which the refund claim of the applicants are either rejected or withheld by the department, and this may be due to lack of clarity of provisions and due to frivolous grounds taken by the department. Now, certain ambiguities are removed through the circulars by the department, and certain ambiguities will get removed through this jurisprudence. In the case, when an applicant generally files the refund application, then generally the department grants this refund after the prescribed time limit of 60 days. In this case, the applicants become eligible for interest also for delayed payment of refund. However, the department generally does not incline for granting the interest. Similar case happened in the case of Pannaj Engineering Limited, wherein the appellant has exported submersible pumps and discharged IGST on such export. The department did not process the refund for a period of 6 months, and after 6 months they have put the petitioner under the category of risky exporter, and that too without providing any reason. The petitioner approached High Court, and High Court observed that section 56, which allows interest in case of delayed payment of refund, is a mandatory provision. Therefore, where a tax is ordered to be refunded is not refunded within 60 days from the date of receipt of application, interest shall be payable in respect of such refund immediately after the expiry of 60 days from the date of receipt of application till the rate of refund of tax. And accordingly, the court has issued direction for the grant of interest. Therefore, in this case, and along with all certain other cases, will help the applicant for seeking interest claim where the department denies payment of interest in case of delay in processing the refund. Then the second issue relates to validity of deficiency memo. In this case, the petitioner has filed a refund application in respect of export made under LUT. The department issued show cause notice on various grounds and rejected the application of the applicant without granting any opportunity. Applicant filed a case against this order before the first appellate authority, and the first appellate authority decided the case in the favor of the applicant. Thereafter, the applicant again filed the refund application for seeking the refund in pursuance of this order. Department issued a deficiency memo mentioning that all the relevant documents are not furnished along with the refund application and did not process the refund application. The applicant approached High Court, Delhi High Court, wherein the High Court observed that once the petitioner has succeeded in the appellate proceedings, the department cannot issue any deficiency memo. The petitioner has already filed the application, and at the time of filing the application, the petitioner would have submitted all the undertakings and the declarations required under the law. The petitioner cannot be made liable to file appeal against after he succeeded in the appellate proceedings. However, the applicant has filed the fresh application only to trigger the processing of refund in pursuance of the order issued by the appellate authority. Therefore, such refund application should be considered in continuation of the earlier refund application filed by the applicant. Therefore, the department cannot reissue the deficiency memo seeking any undertaking or declaration which was already submitted in the initial stage of filing the refund application. Basis this observation, the court directed the department to process the refund application of the applicant. Then again, in the case of deficiency, in the case of Knowledge Capital Services Private Limited, what happens is generally the department does not make difference between the documents or the forms. So sometimes it may happen that certain discrepancies which are ought to be communicated through a deficiency memo are communicated through the show cause notice. This happens actually in many cases, that the department is communicating the deficiencies of any application through the show cause notices. In such cases, what may happen? If the department have issued RFD 03 for communicating the deficiencies, the applicant can again file the fresh application reviewing those difficulties. If this DRC 03 or deficiency memo is issued within the time limitation of 2 years, it can file. However, if the department is communicating such deficiencies in RFD 08, then and rejecting the application of the applicant, in such case, the applicant would not have any solution for filing the refund application again, but he has to contest the order passed by the rejection order passed by the appellate authority, adjudicating authority before the appellate authority. So in a way, it takes away the right of the petitioner or the applicant to file the refund application again. So in this case, what happened? The petitioner applied for a refund and received acknowledgement from the GST department in form RFD 02 without any remark. Also, the department has not issued any deficiency memo to the applicant. They have directly issued RFD 08 in which they have mentioned certain deficiencies. The petitioner asked for some time to reply this so-called notice. However, the department has rejected the refund application without granting any opportunity. The court held that the methodology adopted by the department for rejecting the refund application is not in accordance with the provisions of the CGST rules. The deficiency which have been communicated through RFD 02 should have been communicated through Form RFD 03, which is prescribed for this period purpose in the CGST rules. The forms plays a critical role in the GST system, and in case of wrong selection or wrong usage of wrong forms can lead to unintentional and needless litigations. In this case, the court also observed that the petitioner was not given the opportunity to correct the deficiencies and have also not given the opportunity of being heard. Therefore, the court has set aside the order. Then the next topic relates to the withholding of refund application. In this case, department rejected the refund claim of the applicant for not furnishing invoice level FIRC. While filing the refund claim for services, the applicants are required or mandatorily required to give the details of FIRC. And in this case, a consolidated FIRC was provided by the applicant. So department rejected the refund claim, saying that invoice level FIRC is not provided. Applicant appealed against this order before the appellate authority, and the appellate authority held that issuance of consolidated FRC by the banker cannot be a ground for rejection of refund to the applicant. Even after such order, department does not process the fresh refund application filed by the applicant, citing the reason that the observation made by the appellate authority is erroneous and department proposed to file an appeal against the said decision as well as tribunal will be constituted. The High Court held that when an application is filed for seeking refund and that was rejected by the department, against which the appellate authority has passed a favorable order in the favor of the applicant, the revenue cannot ignore such order. They have to process the application filed by the applicant in pursuance of the order passed by the appellate authority. They have the right to file appeal against the order of the appellate authority, but they cannot ignore the order. They cannot sit on the order for not processing the refund application. Therefore, the court has directed the department to grant refund along with the interest. Then in the next case, in certain cases, nowadays department is withholding refund on the ground of fake invoice allegations. So in the case of BC Controls Limited, the department withheld the application filed by the appellant, alleging that the application is essentially based on the fake invoices alleged to be generated in the transaction with a non-existing company. Therefore, in this case, what happened that the applicant has made an application for seeking refund, department rejected, withheld the refund application, saying that the invoices issued by the suppliers are fake invoices and the companies which have issued these invoices are non-existent company. Therefore, we will not process the refund application. The applicant approached the court. The court held that when an application is filed for seeking refund, it has to be decided on either ways, in accordance with the provisions of the law and on the basis of evidence and available with the department. It cannot keep the refund application pending indefinitely on the ground of certain proceedings. So that if the department is withholding refund on account of such allegations, then on the basis of this judgments, it can be argued that the department has to process the refund application of the applicant, and in case if the department finds any substantial evidence against the applicant in future, they can initiate separate proceedings in pursuance of section 673 or 74 of the CGST Act, but they cannot keep this application pending indefinitely. Then in certain cases, department reject the application on some frivolous grounds. In the case of Balaji Exim, what happened that the applicant has filed refund application in respect of accumulated ITC for zero-rated supplies. The department rejected the refund application, citing that the applicant is a part of supply chain involving fake invoice transactions. Therefore, that means that the invoices on the basis of which the applicant has claimed ITC and now claiming GST refund were fake invoices issued by the suppliers. The court held that in this case, there was no doubt that the goods have been actually exported. The invoices were issued by a registered person, and the applicant has made payment against the invoices and including the taxes. The refund, and there is no conclusive finding or any cognate material that the invoices issued by the supplier to the petitioners are fake invoice. Therefore, the refund application cannot be rejected merely on the basis of apprehension that the supplier has issued fake invoice. Therefore, department cannot deny the refund on the basis of such allegation. Then, in the case of Bharat Sanchar Nigam Limited, BSNL filed refund application before the jurisdictional authority within the time limit. Jurisdictional authority issued deficiency memo. The appellant resolved the deficiency memo. However, department rejected the refund application filed by BSNL, citing that the deficiency memo was resolved after the limitation period of 2 years. The adjudicating authority referred to Rule 90, Sub-Rule 3 of the CGST rules, according to which, in case of deficiency, the applicant has to file fresh application for refund, and the date of filing this fresh application shall be considered for the period of limitation. So in this case, because the deficiency was resolved after the limitation period of 2 years, the department rejected the refund application. The court held that in this case, the department has sought certain additional document and information through the deficiency memo. While filing the application originally, the applicant has already submitted all the documentary evidences which was required to be submitted under Rule 89(2). Therefore, this cannot be ignored for the purpose of limitation. The refund should be merely because certain documents and clarification was sought in the deficiency memo. It will not make the application filed by the taxpayers as not non-est, and therefore, in this case, the limitations period should be considered from the date of refund applications filed originally. The date of filing, resolving the deficiency memo shall not be considered. Accordingly, the order passed, rejection order passed by the department was set aside. sometime it may happen that while calculating the refund amount, eligible refund amount, there may occur some arithmetical error, due to which the taxpayer may claim lower amount of tax. This happens in the case of Measures Sri Ranuka Sugars Limited versus State of Gujarat. The petitioner calculated, the employee of the petitioner calculated the refund amount, but due to some arithmetical error, certain refund amount was left out. So the petitioner has filed the refund application for accumulated ITC for the lesser amount through the
Excuse me, Chetan sir. We can summarize in the few minutes, so we can
Yes,
go
yes.
with the next speaker. We're
Yes.
shortage of time.
yes, 5 minutes, 5 minutes.
Okay, no issue.
So in this case, what happened that realizing the mistake, the petitioner has again filed the supplementary refund claim under the category any other, because portal does not allow to file second refund claim under the same category on the portal. It was held that when the taxpayer or when the applicant has complied with the substantive conditions, and so the refund cannot be denied on the basis of technical error on the electronic system. In this case, the petitioner has no option. He has to upload the supplementary application under the any other category, and such refund amount shall be allowed to the applicant. So nowadays the department are conducting such proceedings and investigations in against the various SSCs, and while this search proceedings, the department recover certain tax amount along with interest and penalties through form DRC 03. They contend that this is the voluntary payment made by the taxpayers during the proceedings, and therefore it should not be refunded. High Court held that this should not be considered as self-ascertained and voluntary payment, because Section 74, subsection 5 does not allow to pay advance tax without assessment of final determination of tax. Therefore, such payment cannot be considered as voluntary and self-ascertainment basis as contemplated under Section 74, and the same need to be refunded. Further, there are few changes which are meant to align or correct the legal positions. The first provision is regarding a change in Section 54, under which they have removed the portion with which 54(6) allows ITC in respect provisional ITC of 90%. And this excludes, originally this excludes the amount of input tax credit provisionally accepted. However, now this provision related to provisional acceptance of ITC is removed from Section 41. Therefore, they have also removed it from Section 54(6). Further, in Rule 89, it was provided that in case of casual refund claim filed by the casual taxpayer persons and non-taxable persons, the refund claims shall be filed in the last return required to be furnished by him, whereas actually they have to file the refund application after the last return they furnish. So they have to file this return refund applications separately. So they have corrected this position, and they have changed that refund application, instead of mentioning refund application should be filed in the last return, refund application should be filed after the last return required to be furnished by the applicant. That's all from my side. Thank you.
Thank you, sir. Thank you very much for insights to our participants. Now, request to Ms. Neha Jain from Nitya Tax Associates to present our presentation legal jurisprudence and GST ITC. She is a qualified chartered accountant with over 6 years of experience in indirect tax and advisory services. Ms. Neha Jain, please.
Sure. Thank you, Nandaji. Just give me a
Thank you.
second. I'll share my screen.
Yeah. No. Yeah, coming now. Coming. Yes.
Yeah, is my screen visible?
Yeah, visible now. Perfect.
Yeah. Okay. Good morning, everyone. Thank you for joining in large numbers. So today we'll discuss the topic some of the changes on input tax credit area and the mainly legal jurisprudence around that. So firstly, we'll see what are the jurisprudence and what are the issues regarding time limit to claim ITC. Recently, in the case of Tirumalakonda Plywoods, the time limit of claiming ITC, which is there under section 16(4) of the CGST Act, has been challenged. And it was held that ITC is not a mere right of the taxpayer. It is a concession or a benefit that is given to taxpayers. And that is coupled with some conditions and restrictions which are there under section 16. So the court held that those conditions and restrictions are valid. And one of the condition which is there under section 16(4) regarding time limit to claim ITC, that is also valid. Those conditions cannot be treated in isolation, that ITC is a mere right and it can be availed just without following those conditions. The court further held that constitutionally it was also challenged that ITC is a property of the taxpayer under Article 300A of the Constitution of India. So the court held that it is not a mere property of the taxpayer. It is a benefit which legislature has consciously given to taxpayers. It is a prerogative of legislature to give it or not. And that is why they have provided under the law with some conditions. Further, the court held basis these reasons that it is not violative of Article 14 and 19(1)(g) of the Constitution, because it is not restricting taxpayers to do its business. It is not creating any differential treatment, or it is not against right to equality. So therefore, all these articles are not, there is no violation of these articles as to claiming the time limit of ITC. Then the court held that even if it is considered as a right, those conditions are valid. And one of the point which was raised by petitioner in this case is that section 16(2) starts with a non-obstinate clause. So as Bimalji also initially discussed that it is very important point in this ruling that since section 16(2) is notwithstanding other provisions of the act, so the petitioner contended that it will override section 16(4), which is time limit. So the court held that it is not the case. Time limit is independent, and section 16(2) is only notwithstanding any of the negative provisions in that subsection. So it should not be read as that time limit is altogether not a condition for claiming ITC. So I'll just discuss that whether the ruling is correct legally. So in our view, the ruling is legally correct, and time limit to claim ITC is valid. In past regime also, many of you would recall that there was a case of Supreme Court in case of Osram Surya. So there also the court observed that ITC is surely a benefit which is given by taxpayers to, which is given by the legislature to taxpayer, and bringing a time limit to claim such ITC is not restricting that ITC. It is only providing a time frame to claim that ITC. So it is not equivalent to taking away that benefit from the taxpayer. It is only providing an additional condition. Moving further, discussing about ITC availability basis the condition of payment of tax by supplier. So I'll just discuss briefly the history of lot of jurisprudence has come up regarding this condition, challenging the condition constitutionally, whether this condition is valid, whether this condition should be read down in case of bona fide recipient, etc. So briefly discussing the history so far. Under pre-GST regime in VAT laws, in some of the VAT laws, this condition was there, which is there under section 16(2)(c) of the CGST Act. That means that taxpayer will be allowed credit only when the payment of tax is made by supplier to the government. So this condition under similar condition under VAT laws was also challenged in Arise India in front of Delhi High Court, and similarly in Sethi Flour Mills, and also in Mahalakshmi Cotton in front of Bombay High Court. So in Arise India, the Delhi High Court has held, considering various things, that if the conduct of the recipient is bona fide, he is able to prove the genuineness of the transactions basis all the documents trail, etc., then in that case, this condition should not be read strictly. And this condition, because it is not creating any difference between bona fide or non-bona fide recipient. So logically and reasonably, this condition should be read only for the non-bona fide cases. So that's how the court read down this condition and held that because of the supplier's default, ITC should not be denied to the purchasing dealer. Similar view was taken in Sethi floor, but to the contrary, different view was taken in Mahalakshmi Cotton in case of Maharashtra VAT Act. There, the court held that this condition needs to be read as strictly, and if tax is not factually paid by the supplier to the government, then the purchasing dealer cannot claim ITC. So just an update that in case of Arise India, SLP was also dismissed by the Supreme Court, but the matter is still it is not the law of the land. The High Court ruling is not of the law of the land by the Supreme Court because it was merely an SLP dismissal. Subsequently, under GST, the conditions, section 16(2)(c) condition, and along with the condition which is there under section 16(2)(a), that is that ITC is allowed only when it fully matches with 2B. So that was also challenged in the case of NGK and Associates LLP in front of Delhi High Court, where we appeared, and in case of Sahil Enterprises. So the decision is pending there, and it was challenged basis all those grounds that recipient is bona fide, he has acted genuinely, he has all the proofs of payment to the supplier, etc. And beyond a point, due to supplier's default, ITC should not be denied to the recipient. Subsequently, in case of DY Bethel Enterprises, it was a case that petitioner, the department alleged that petitioner did not even receive goods, and therefore they were challenging section 16(2)(c) condition that because goods were not received by the recipient, so it will be deemed that tax is also not paid by the supplier. So there the High Court said that it seems that merely because of challenging non-receipt of goods by the petitioner, it would not mean that tax is not paid by the supplier, and also with the fact that there is no proceeding against supplier first. So we cannot hold that ITC is not available to the recipient. And there the court directed the department that you first proceed against supplier. Then subsequently, in case of LGW Industries, ITC was disallowed on some of the purchasing transactions where suppliers were found to be non-existent, and also registration of suppliers were cancelled retrospectively. So there the department alleged that because registration was cancelled retrospectively, so it will be deemed that taxes on the purchase transactions, whatever made before that in the relevant period, that was not paid to the government, and therefore ITC should not be allowed. So there the court said that because before cancellation, the details of all the purchases were readily available on the portal. And it was not that before transactions, the recipient has acted in a good manner. He has actually received goods. He has actually has all the documents, has all payment channel, etc. So merely because of the retrospective cancellation, it should not be held that ITC is not allowed. And similar view was taken in Sanchita Kundu also by Calcutta High Court. Recently, in case of Jai Balaji by Madras High Court, ITC was disallowed in similar situation, but the change is that there the registration of the suppliers was cancelled and the purchase transactions were made after the cancellation. So there it was a clear case that after cancellation, the taxpayer could not have supplied even and could not have paid taxes to the government. So there the department was right in saying that the taxes could not be paid by the supplier to the government, and therefore ITC should not be allowed. So if we see the history of these rulings, and we'll discuss the recent rulings in the later part of the slides, that this condition has been challenged since past regime, and it is continued under GST regime also. So and to cater this, that multiple courts have held multiple rulings. Some of the high courts have held in favor, some of the high courts have held against, that they have read this condition strictly, etc. And there is another condition which has brought up in the law regarding complete matching with 2B, then only credit can be taken by recipient. So this is coupled with the entire focus of the government to ensure that payment is collected by the supplier and it is paid by the supplier to the government. and the whole onus is placed on the recipient only to prove the genuineness of the transactions, to prove the entire chain, and also to prove that supplier has actually paid taxes to the government. So this is again becoming an onerous condition of the recipient since past regime. Subsequent to these developments and interpretations, new rule 37A was introduced in section 16(2)(c) and section 41 of the CGST Act. As per this rule, highlighting a point before this rule amendment, that before this rule, there was no clarity in the law that once supplier made tax payment to the government, or supplier files as GST or 3B, etc., and taxes subsequently collected by the government from the supplier, then what would be the ITC eligibility at the recipient end? Will he be eligible to claim ITC subsequently? Suppose time limit has expired, etc., or his ITC would have gone because of the time limit expiry, etc. So this rule says that there may be a situation that supplier has filed invoices or debit note in GST 1. It is reflecting in 2B, it is matching, the matching condition fulfills, but yet he does not file his 3B till 30th September of next financial year. So that means that if he has not filed 3B, which is the return for making tax payment, it would be deemed that he has not paid taxes to the government. And therefore, because of the section 16(2)(c) condition, ITC will not be allowed. To cater the situation, the rule has said that what would be the consequence in this case? The recipient needs to reverse ITC till the time 3B is not filed by the supplier, and the window is till 30th November. If it is not reversed by the recipient by that time, then interest will be payable, which is there under section 50. And also subsequently, if the taxes collected from the supplier and supplier files his return, then recipient can re-avail that ITC without any time limit. So this re-availment provision is beneficial, that to the extent it clarifies that subsequently, if tax is collected, then also he can claim ITC without any time limit. Now, recently in the case of Gargo traders in front of Calcutta High Court, ITC was denied in situation where supplier's registration was again cancelled retrospectively. So this cancellation of registration with retrospective effect due to multiple reasons at supplier's end, it is becoming actually a very, very haunting issue against the taxpayers. And because of the whole thing, the recipient is getting caught. Then in this case also, the High Court held in favor of the petitioner that because before cancellation, the purchase transactions were made by recipient in a good manner. He has validly purchased, he has valid invoices, he made payment to the supplier validly, and also all the details were there on the portal to verify from the government end also and from the recipient end also. So there is no failure on the part of recipient to ensure any of the conditions of the section 16. So therefore they allowed ITC. And they said that mere retrospective cancellation would not automatically deny ITC, because cancellation with retrospective effect can happen for any reason, but it should not automatically deny ITC to the recipient where he has acted bona fide in all manner. Contrary to this, in case of Pinstar Automotive, the Madras High Court held against the petitioner. It said that section 16(2)(c) condition is there, which is a substantive condition. It needs to be followed strictly. And that condition, if it is not factually proved or it is not factually made, that payment is not ultimately made to the government, then irrespective of anything, any bona fide conduct of the recipient, he can't claim ITC. But yes, in case of Pinstar, the High Court directed the department that mechanism should be introduced for re-availment of that ITC if subsequently tax is collected from supplier. So that's how the amendment in Rule 37A has been brought up. And that is a welcoming amendment. Next, recently, as Bimalji also highlighted, that the recent ruling of Patna High Court in case of Astha Enterprises, that is creating a lot of worries in the market, especially because of the negative ruling in case of meeting section 16(2)(c) condition. In this case, again, the court has held that ITC is not a mere right of the taxpayer. It is in the nature of benefit or concession, which legislature has on its discretion has allowed to the taxpayer. And that is coupled with some conditions and restrictions those conditions and restrictions needs to be followed strictly. And one of the condition of section 16(2)(c, payment by supplier to government, that also needs to be cumulatively satisfied. It is not something that all other conditions are satisfied and recipient has acted bona fide, so he can just claim that yes, because I have done on my all my part and it is supplier's default, so ITC should be allowed to me. In this case, the court held that section 16(2)(c condition is substantive condition. Irrespective of anything, that condition needs to be strictly followed. And if it is not met, then ITC cannot be allowed to recipient. The case, the High Court in this case distinguished the favorable ruling of DY Bethel Enterprises given by Madras High Court. It states that in that case, the High Court did not consider the provisions of section 16(2)(c. It merely directed the department to initiate proceeding against the supplier first because of the lack of clarity regarding the genuineness of the transaction. Importantly, in this case, the High Court has specifically held that if there is a subsequent recovery of tax from the supplier or recovery is initiated by the government against the supplier and taxes collected thereafter, then there would be a situation of double taxation, that on one side ITC is reversed at the recipient end and on the other side taxes collected from the supplier. So on a single transaction, it will be a case of double taxation. And therefore, to avoid that, the only remedy that purchasing dealer can exercise is that he can commercially recover that tax component from the supplier or either claim refund of that taxes that he has reversed. So in our view, this ruling has not considered all the other High Court's ruling, like in case of Arise India and all other favorable rulings that have come before this ruling. It has strictly construed the provisions of section 16(2)(c, which is in itself is an impossible condition in entirety for the recipient to claim. So, this condition, if you see that if recipient has done all his act in a bona fide manner, he has verified GST 1 of the supplier, his returns, his details are matching with his 3B and the 2B, etc. So it is beyond the control of the recipient to ensure payment of tax by the supplier. Supplier can default for any reason. He has no funds, he is not genuinely doing business, etc. But if it is not recipient faults, then ITC denial is an onerous burden on the recipient, and that the court has not has considered. Further, it is also important to note that there is a settled principle that if there is a condition in the act to follow, and to follow the fulfillment of that condition is just impossible to perform, like similar to the point that we discussed, that if it is impossible to perform, that condition should be read as not applicable, instead of merely making that condition so stringent that it becomes impossible for the recipient to claim. Further, in the case of Vimal Alloys, in this case, the applicant had a question that whether he will be allowed to claim ITC if his immediate supplier has paid taxes, but the preceding supplier to the immediate supplier did not pay taxes. So in this case, the AAR incorrectly considered section 16(2)(c condition, and basis that he held that ITC will not be allowed even if in the entire chain the preceding supplier has also not paid taxes. So in our view, this ruling is totally incorrect because it has went beyond the provisions of section 16(2)(c. Next is the situation related to this condition only, that burden of proof of claiming ITC is on purchasing dealer. So recently in the case of Ecom Jill Coffee Trading, the Supreme Court has considered a case where genuineness of purchase transactions was in doubt. And in some cases, the seller's registration was also cancelled. So in this case, the court has strictly considered this condition where there is a ITC claim made by the purchasing dealer, and he has all the documents, he has all the proof of payment channels, etc. But still the transactions were not genuine, or the registrations of the sellers was cancelled and payment was ultimately not paid by the seller to the government. Then the ultimate burden to prove that ITC claim lies on the purchasing dealer itself. It is not the liability or the onus of the revenue to prove that yes, transactions were genuine. The court held that the genuineness of the transaction has to be proved by the purchasing dealer only. So they have read it strictly. The court also held that mere production of all the invoices claim by the recipient to act in a bona fide manner. He is bona fide, he has made genuine purchases, etc. That will not be sufficient to claim ITC. Ultimately, he has to prove the entire claim of ITC, and the whole burden lies on him only. So, basis this, the court denied ITC in this case. And important to note that similar provision is there under Section 55 of the CGST Act, which says that if any person is claiming ITC under GST, then the burden of proof of that claim and the genuineness of that claim lies on purchasing dealer only. So, being the Supreme Court ruling the law of the land, it will be an important consideration or an important decision for proving genuineness by the buyers, and this will have an impact of challenge to the Section 16(2)(c) condition that is already pending before other high courts. So, like we discussed, that there need to be all documents and there need to be all proof with the recipient to claim that ITC and to prove that ITC as genuine. Next situation is that there are rulings where ITC is denied due to mismatch between 2A and 3B. So till the time we have been discussing the condition of payment by supplier to government, linking the ITC claim with this mismatch of 2A versus 3B, that is also a situation that is challenged by department in many cases. And recently in the case of before jumping to the ruling, just discussing the little background of mismatch. We all know that Section 16(2)AA was inserted from January 2022, where complete matching is mandated under the Act itself. Then before that, Rule 36(4) was there, which gave some buffer to claim that ITC 5%, 10%, 20%, but after this January 2022, all that buffer has removed. This matching provision, which is there under Section 16(2)AA, it is not referring or it is not dealing with a situation where supplier is actually a defaulting party and it is beyond the control of the recipient. So despite all these facts, the recipient has to match ITC fully with 2B and then only he can claim ITC. So the common issues due to this mismatch arises that supplier doesn't file their 3B, that they are filing their 1, but they are not filing their 3B and actual payment is not made by the supplier. Or they file their GST 1 incorrectly, and that's how the mismatch creates that sometimes the GST number is incorrect, sometimes the value is incorrect. So like that mismatch comes. Cancellation of supplier registration, we discussed that due to that also ITC is denied and due to some clerical errors. And one important point of mismatch is also raised by department in case of ITC on import. So even though the law does not require ITC matching for import cases, because for import ITC is claim basis bill of entry, it is not claim basis invoice, which will again be filed by supplier in GST 1 and be reflected in 2B of the recipient. ITC on import is claimed merely basis the bill of entry. So the law itself clarifies that yes, import cases are not covered for matching. And also there are circulars and press releases around that, but still practically at ground level, the authorities are not accepting this fact. Then thereafter, the department to deal with this situation and mismatch, ITC denial, etc., they came up with circular number 183, where they said that due to any reason of mismatch between between 3B and 2B, so depending on the differences, if it exceeds rupees 5 lakh or it does not exceed rupees 5 lakh, then the recipient has to give that certificate by taking it from supplier or from supplier CA that yes, the tax on his supplies has actually been paid to the government. So again, the entire focus is placed on actual payment of tax by supplier to government. And then only the ITC claim can be proved in front of the department. Now, important thing is that when this circular 183 came, it was only applicable in certain situations where there were errors. It did not deal with the situation where suppliers are actually not found. they have closed their business, they are not existing there, etc. And also the circular relates to financial year 17-18 and 18-19. It was silent for 19-20 and 20-21 till December 2021 when the matching was there. So since before January 1, 2022, there was no provision of matching in the Act. So the entire matching concept was beyond law, and it was not statutory backed up by the law. It was only from the rules, etc., in the subordinate law that the matching was emphasized. Then where supplier is actually not fined, then these mechanisms or these matching principle doesn't work. And also before the circular number 193, when the prior circular was actually silent on the period April 19 to December 2021. So there was a doubt that whether those mechanism of taking certificate from suppliers or supplier CA could be applied for this period also. So in case of Wipro by Karnataka High Court, they have allowed relief to the petitioner that yes, they can follow the mechanism which is there under circular 183. And thereafter, recently, circular number 193 also has been brought, and it extended the applicability of circular 183 to this period also. Now, the recent rule 88D, which was brought up by the from the decisions of 15th GST Council meeting, and as Bimalji also highlighted, that this rule is really a rigorous rule. Because till now, the notices were received by taxpayers regarding any mismatch of ITC between 3B and 2B, and they were to clarify and the reasons, etc. Or if there is actual mismatch or actual non-payment taxes, they were required to pay taxes, etc. But now the rule says that there will be an auto intimation in DRC 01C that will be sent to the taxpayers for any difference between ITC between 2B and 3B. Otherwise, if the reply is not satisfactory, or if the amount as per this difference is not paid by the taxpayer, then the proceeding under section 73 or 74 can be initiated. Will be non-fraud cases or fraud cases depending on the situation. And till now, the rule has already been introduced. But till now, from the news report, it has been gathered that the government is thinking that if the difference is 20% or more than 25 lakh, then those intimations will be sent. So in times to come, it will be seen that for how much amount or how much buffer these intimations will come, how actually authority will deal with those intimations replies, whether there will be genuine enough to consider the clarifications given by taxpayers, or whether there will be just ignoring the clarifications, or there will be insisting on payment of taxes without listening to any reasons, etc. So again, due to mismatch recently in the case of Suncraft Energy, the revenue was demanded ITC reversal because there was a mismatch of ITC between 2A and 3B, and that too for the period when section 16(2) AA was not there. That is period prior to January 1, 2022. So in this case, the court rightly held that ITC reversal needs to be demanded from recipient only in exceptional circumstances. That just because of any mismatch, when there was no matching mandate in the law, ITC reversal cannot be demanded from recipient. The court rightly considered two important press releases of the government. One, when it came regarding the facilitation of GST at 2A. So at the time of initial GST audit, the government in its press release only has clarified that GST at 2A is a facility for taxpayers to see their ITC details, etc. And nowhere in the law it is mandated that ITC needs to be claimed basis 2A only. The another press release was brought up at the time of new return proposal system. So wherein the government clarified that the ITC denial due to matching or acceptance mechanism between 1 and 3B, etc., that is only to enable the reconciliations, etc., and only in the exceptional circumstances ITC reversal can be demanded. So basis that, the court held that ITC should not be automatically denied. And if there is any mismatch or if there is any doubt regarding payment of taxes by the supplier, then proceeding must be initiated against supplier first. And then the ITC can be questioned at the recipient end. So after discussing all the cases related to ITC mismatch or non-payment of taxes by supplier, we'll see some of these important rulings wherein ITC on other conditions or other aspects of the law has been dealt. So in case of ITC on warranty expenses, there was always a doubt in the industry that whatever free of cost warranty is provided in the industry, and some goods are provided under warranty free of cost, etc., as a replacement, etc. So there was a doubt that whether ITC can be allowed to the recipient in that case. So typically in a transaction between OEM and distributor or manufacturer and distributor. So recently in the case of Prague industry, it has been correctly held that if any supply of parts is made under warranty without any consideration, that is the warranty obligation of the manufacturer only. So GST will not be payable in that case because consideration for that warranty is inherently included in the original supply only. And since it is not a gift, it is an obligation of the manufacturer to provide that warranty. So whatever is provided free of cost under that warranty arrangement, that will not become gift, and ITC will be allowed to the recipient, which will be distributor in that case. Similar ruling was earlier also held in case of given by the Kerala AR in case of Saraswati Metal Works. And recently Circular 195 after the GST Council meeting has also held to the favorable that in those cases ITC will be allowed because firstly, it is not a case of FOC because consideration for warranty is included in the original supply, and also it is not a gift. In case of ITC on construction, there are many issues regarding whether ITC on any construction of any structure will be allowed or not, because under section 75 CD, it caters to the restriction of ITC, where the construction of any structure being treated as an immovable property or being treated as an immovable property in the nature of plant and machinery is determined. So basis that it needs to be seen structure wise that whether ITC will be allowed or not. Another restriction of ITC on construction is that whenever a construction is done by taxpayers, if it is on own account, then ITC is disallowed. So in case of mineral systems and solutions, there was a question before the AAR that whether the ITC on construction of warehouse, which will be ultimately used for letting out purpose, that will be allowed or not. So in this case, the AAR held that since warehouse will be owned by the applicant, so whatever construction was done on that warehouse, that will be done on the own account. Therefore, ITC will not be allowed in light of these restrictions under section 17.5. The AR held that, though incorrectly, that they incorrectly held that the issue which is already open which is already pending before the Supreme Court in case of safari retreats. There, the Orissa High Court held that the own account should not be treated as where it is for the business purpose and for business letting out. There was a case of construction of shopping mall, etc. So in case of mineral systems, the AR observed that safari retreat case will be distinguished in this case because there the question was construction of shopping mall and here it is a question of construction of warehouse. So in our view, this distinction is not correct. So finally, the AR held that ITC will not be allowed. And also AR incorrectly held that this construction of warehouse, if it is not capitalized in the books of applicant, then ITC will be allowed. So here an important observation and important point to note that ITC on construction, on certain construction is allowed if it is not capitalized in books, only on the part of construction which is an extended construction. That means repairs, alterations, etc., and not the original construction like the warehouse. So this ruling is incorrect to that extent.
Now I request for a summarize in few seconds.
Sure, Nandaji. Just
Okay.
running last 2 slides. Next is ITC on lease premium. So this is again an important issue which is not settled. And there are rulings on this issue that whether ITC on lease premium paid will be allowed on for land. So in case of recently in the case of Kamaraja Port Limited, this was a question whether the advance rent paid by applicant will be ITC on that will be allowed. So AR held that the upfront premium paid by the applicant will not be treated as related to the construction, because any expense which is there for incurred for construction, that is not allowed. And the premium paid for taking that property on rent is not for construction. It actually towards the calculation of the lease rentals for the entire lease period. So therefore, the ITC should not be disallowed on that. Next, ITC on CSR. That is also again important issue, that whether it is allowed or not. So before discussing just the recent ruling, that we all know that through the council meetings, past council meetings, it was decided that ITC on CSR will be specifically restricted under section 17(5), be it goods expense or a service expense, and that has been made effective also recently. So in case of Shriram Pistons rulings, AAR, and also in case of Polycab Wires, the earlier Kerala AAR, both the rulings have incorrectly held, even before the amendment, that the CSR expenses will not be considered as in course or furtherance of business. It will rather qualify as a gift, and therefore ITC will not be allowed. And further, the ruling incorrectly held that it will be a permanent disposal of asset as per Schedule 1. So basis this, the rulings denied ITC in case of CSR expenses. On the contrary, in case of Bambino Pasto and Dwarika Sugars, the AR has correctly held that it is a mandated expense under Companies Act. It is a statutory requirement, and therefore it will not become the gift because it is not done voluntarily. It is done under statutory mandate. And it is an important part of business because it is incurred for the purpose of business only. It forms integral part of the business running and operations. So therefore ITC should be allowed. So the rulings have given contrary view, but yes, after the specific restriction in section 17(5), which is prospective, ITC on CSR is specifically barred henceforth. With this, I come to end of the session.
Thank you very much.
Thank you, Nanda.
Thank you. Now I request to Ms. Sweta Valecha to present her presentation, Legal Jurisprudence on Horse Race, Casino and Online Gaming. Ms. Sweta, I want to introduce her. She is a director at LKS. She is an indirect tax professional with 11-year experience in indirect tax advisory, compliance in different sectors, equipped with GST expertise and competent in integration business process and technology. Yeah.
Yes, sir. Thank you so much, Nandaji, and thank you so much, PhD Chambers, for giving us this opportunity. I hope I'm audible, sir.
Yeah, audible and visible, both.
Yes, sir. Okay. Thank you so much. Good afternoon, everyone. So we're coming to the third topic of this webinar. And here, so far, we were talking about the general things that are applicable, or the amendments that are applicable to the entire industry. Now we are focusing to a specific industry, which is the online gaming industry. Now, before we move on to the tax implication and how the amendments have been unfolded in this recent GST Council meetings, let me give you a background about this industry. Now, this industry is an industry which has developed in the last 10 years in India. So India as a gaming market presently is of a size of $2.8 billion and is expected to reach a whooping size of $5 billion by 2025, which effectively means that it is expected to grow at a compounded annual growth rate of 28 to 30%. In fact, between 2017 and 2020, the country's gaming industry, the CAGR was at 38%, which in comparison to China, which stood at 8%, and US at 10%, is substantially one of the significant industries that is going in the recent past. However, to arrest the increasing cases of addiction, various state governments are imposing bans on games of chance, which is similar to your online gambling. In fact, the government also appointed the Ministry of Electronics and Information Technology, MeitY as we call it, as the nodal ministry to regulate gaming. Now, as I mentioned earlier, the bans are imposed on games of chance. So now let us try and understand the difference between a games of chance and a games of skill. This distinction is not something which is very recent. And in fact, it has been a matter of debate for a very long time. In fact, since 1950s. The Supreme Court, while discussing about the constitutional validity of Price Competition Act in the famous case of RMD Chamunwala, specifically created a distinction between game of chance and game of skills. As the word itself suggests, skill is something which can be developed, while chance is something that is entirely dependent on the luck. A skill is something that can be honed. Chances are only meant to be taken. Therefore, if one plays a game where he wants to capitalize on the skills that he has developed over a period of time, and that person has become an expert in such game by practicing that game over and over again, such game is known as a game of skill. So a classical example of the same will be chess, or say maybe an online KBC. One might want to earn some money by playing these online games, and these games are generally seen with a lot of respect. I'll give you a few examples of what is considered to be a game of skill. Now, Rummy has been held to be a game of skill in the famous case of K. Satyanarayan, wherein the AP High Court had held that Rummy requires certain amount of skill because the fall of the cards has to be memorized, and the building of Rummy, it requires considerable skill in holding and discarding the cards. Therefore, it was held that Rummy is mainly a game of skill. That same analogy was also subsequently given in other High Court rulings. Next are these fantasy games. Now, these fantasy games have also been held to be a game of skill by the Punjab and Haryana High Court as well as the Bombay High Court. Similarly, the Tamil Nadu High Court has also held that poker is also a game of skill. In fact, a couple of months back, there was a famous case of Gamescraft, where also the Karnataka High Court had held that Rummy is a game of skill and not a game of chance. So if you see, consistently the distinction that has been drawn is on the kind of game that is being played and how much expertise one can gain in it. While on the other hand, there are games in which the earnings are dependent on the sheer luck of the person. The person need not practice such games to become an expert. And even a novice or a beginner can also turn out to be victorious. Some examples can be lotteries, snakes and ladders, etc. Now, these games of chances are equated at par with gambling. And thus, the state governments have always been very careful and have always wanted that these games should be played in a regulated manner. Now, while having discussed how this industry and what is the difference between a game of chance and game of skills, I'll now move on to the next discussion, which is the GST rates and how the taxation is done for this industry. Now, whenever a player wants to play a game, he has to give some money to the portal, the online company on which the game is to be played. Now, please, I would like to reiterate here, the entire focus is on those games where there is money involved. So if you would notice, whenever you start playing a game, there is a warning that is issued that this can be contagious and it involves financial transactions. So the onus is left on the person who starts playing the game, that he should be careful while playing the game. Now, let us assume that I want to play a game and I have deposited 100 rupees for playing that particular game. Along with me, there will be other players also who would have also deposited the same amount. Now, out of the total money deposited by each of the players, certain portion is kept with the online gaming companies as their platform fee. Let's assume that the portal keeps 10% of the total amount as its platform fee. The remaining 90% amount is actually contributed towards a winning pool or a prize pool. Whichever player wins the game, he wins. The winner is allowed to keep the money kept in the prize pool. So far, the gaming companies were contending that the games of skill cannot be taxed, and therefore the tax was paid only on the platform fee. So now you'll understand what was the reason why we discussed on the game of skills and game of chances. Now, this tax that was being paid by these online gaming companies was they were only paying the tax on the platform fee, which is the 10% contribution. And the tax was also being paid at the rate of 18%. Now, this is commonly known as the gross gaming revenue. Thus, effectively, GST was paid on rupees 10, which was kept as the platform fee. The remaining 90% was kept by the winner, and he was remitted the winning money after deducting TDS at the rate of 30%. Now, this left a lot of scope in interpretation of games of chance and games of skill. Similarly, the governments were finding it very difficult to keep a tab on how to and how much amount is to be kept as a platform fee. To overcome this particular problem, the GST Council in fact, it's not only in the 50th GST Council meeting. This entire discussion has been going on since the 37th GST Council meeting, wherein the industry, and there was actually a kind of a dichotomy where the industry wanted that this GGR model should continue, and the department or the government was not in favor of the same. They had always been in the belief that they wanted to tax the entire revenue that was coming to the platform. Now, I'll just take you through how the GST Council has made these amendments. They have said that we will now treat these online gaming and horse racing as equivalent to lottery, betting, and gambling. There has been a definition which has been introduced in online gaming, and that online gaming does not distinguish between a game of chance or a game of skill. The amendments now have been made in such a manner that first they have clearly specified, they have made an amendment in Schedule 3. Schedule 3 basically gives us a list of all those say situation where the tax is not required to be paid, and they have specifically mentioned that tax is not to be paid on actionable claims except lottery, online gambling, horse racing, betting, and gambling. Similarly, they have also introduced the definitions of all these terminologies or the expressions. Another thing that they have done is with respect to the valuation. Now, in valuation, they have, rather than going into the GGR model, what they have done is they have said that the tax will now be applicable on the face value of the amount that is contributed. So in case of casinos are basically all these places where a ball is rolled and you have to take a call on the number, and then accordingly you get to choose, you get to choose a number, and then according to your luck, you actually are either a winner if that ball falls in that specific number. So basis the face value of the chips that is purchased. In case of horse racing, full value of the bets placed by the bookmakers. And in case of online gaming, full value of the bets placed. On these entire thing, the tax has been said to be applicable at the rate of 28%. Now, what happens in case the tax is made to be paid on 28%? So, as I mentioned earlier, I was giving an example. Okay, maybe I'll take this example and then explain. So, is this table visible? Are you able to read it, Nandaji?
Yes, yes.
Okay. So earlier we took an example that the total entry amount per player was say 100 rupees. Assuming there are 4 players, then 400 rupees was the total contribution made by all the players. Platform fee earlier when we were said was 40 rupees, which is 10% of the entire amount being paid. GST earlier was paid only on this 40 rupees at the rate of 18%. So 7.2 was the GST amount that was being paid to the government. Now the amount that was left for the winners out of the total prize pool was 400 rupees minus the 40 rupees which was contributed minus 7.2 which was the tax that was paid. So effectively 352 rupees was left which had to be distributed or which had to be given to the winners. Obviously, when this amount is remitted back to the winner, there is a TDS amount that is also to be deducted. Now, in the present scenario, or the proposed scenario that we are talking about, the amended scenario, platform fee will continue to be 40. The tax that has to be paid will be 28% on the entire 400. So if you notice, there is a substantial increase in the tax that is being given or that is pocketed by the government. From 7.2, it is increased to 112. So effectively, if you see, the online companies, the gaming companies will continue to get their 40 share. But who gets impacted in this entire scenario is that the winners pool is reduced from 352. It is reduced to 248. Now, this is the entire hue and cry that is going on in the industry, because the industry now is saying that this will effectively mean that the industry has been wiped out. There will not be potential players who would be willing to participate, because now the entire GST will be paid from their pocket. Now, although the amendment has been made in the in the CGST and the IGST Act, it will come into effect from October. So far, they have clearly mentioned that this amendment is being made in a prospective manner. For the past period, the Revenue Secretary has made it very clear that they have gone into the Supreme Court, they have filed SLPs, and they have filed appeals against various decisions passed by the High Courts. And that judgment, the Supreme Court judgment, as and when it is pronounced, the past is going to be determined on the basis of that decision. Now, the online gaming industry, which had seen positive developments in terms of setting up of the nodal ministry, as also positive outcome of deliberations under the income tax law in terms of deduction of TDS on winnings, suddenly has hit a roadblock. This will significantly impact the prizes that the players can win and consequently impact the industry in terms of the user retention. If we see internationally, many governments levy tax on the GGR, the gross gaming revenue, which is actually the service charges retained by the gaming platform. For the various governments of various countries, which were earlier taxing the total entry fee, have evaluated and moved towards taxing GGR, citing viability of the industry, grey market operations. The tax component is significantly high. Now, here is a classical example that while the other countries are moving towards GGR, India, on the other hand, is moving towards a higher tax regime. In the beginning, Bimalji also pointed out that what is to be seen when foreign companies get involved, and the players will be playing on companies who are running all these gaming platforms abroad. Now, this was one of the problems that was being faced by the industry. And obviously, if it was a foreign company who's playing, the liability to pay tax would have fallen on the individual players, which the department or the government would definitely not want. So the amendments have been made in the IGST Act as well. And the gaming companies which are running, which are basically providing all these facilities sitting abroad, they have been mandated to get registered under GST in India, and only then will they be allowed to run their operations in the Indian territory. So this is only some of the examples that I have given and the impact that is there on the online gaming platform. It was a short presentation and we are also running out of time. So Nandaji, I would like to conclude my...
Thank you. Thank you so much. Thank you, Mr. Now the last speaker, Mr. Jogesh Gaba. The presentation on recent changes in GST registration, automation, and GST return filing. Mr. Jogesh Gaba is a managing partner from Gaba & Company. He's a qualified chartered accountant in the firm. He's expert in indirect tax practice. Jogesh ji. Yeah.
Thank you, Nandaji, for the introduction, and thanks everyone for joining the webinar. Can I share my screen, Nandaji, from here?
Please, please.
So basically, you must have already read about these amendments in registrations, automation, and filing of returns after the 51st GST Council meeting. So basically, these amendments have been brought in to curb the menace of GST frauds. Each amendment is focused on that purpose. So therefore, the frauds or the fraudulent taxpayers need to worry about this. But unfortunately, what is happening is that the genuine taxpayers are also sharing that worry, and we'll discuss these amendments, that how it will impact the genuine taxpayers as well. So first, we'll talk about GST revocation of cancellation of GST registration. So it is on a positive front that if your GST registration is cancelled before December 31st, 2022, then you can file the revocation application. Although under the GST laws, the maximum time period with certain permissions is 90 days from the date of cancellation. However, they have provided that you can file the application by August 31st, 2023. So only 6 days are left. Whoever's registration is cancelled before December 31st, 2022, provided that you file all the returns and pay all the dues, including tax, interest, penalty, and late fee, up to the effective date of cancellation. Now, sometimes what happens is the effective date of cancellation, which has become the norm, is that the officers are making it as the inception of GST, that is 1st July 2017, which is not correct. So that would not mean that I have filed the returns and pays the dues up to 1st July 2017 and not thereafter. That should not be the purpose of such a expression used. The purpose is that whenever it was cancelled, you'll have to file all the returns and pay due up to that date. Although they may have mistakenly written as up to effective date of cancellation. So we should not take it as in a interpretation that if my registration is cancelled effectively from 1st July 2017, until that I have already paid it, so therefore my revocation is allowed. No. So we should take it purposefully to say that whenever it is cancelled, before that date, you have filed the returns and pays the dues. Now, personally, I find this extensions and timelines on such scenario as not, in a sense, not making any sense, because let's say your registration is cancelled today, and after maybe 1 year or 2 years, you want to do the business in the same registration again. Okay. So, and you are willing to pay all the taxes with interest, with penalty, with late fee, and you are willing to file all the returns. The law does not allows you any timeline that you can revoke your cancellation. Okay. Because the maximum timeline is 90 days. We're talking about how this notification is not making any sense, because this notification only allows revocation when a person is willing to pay all the taxes, dues, and returns. So even after 2 years, you're willing to pay all these taxes and file returns, then can GST law restrict you from doing business under a GSTN? The answer is no, because the Constitution allows you, it's your fundamental right that you can do a business. Therefore, I personally feel that you can see a permanent amendment in a law where the CGST Act itself has a provision that in such cases, there is this time limit of 90 days, 30 days, or extension of 60 days is not applicable. And such cases may include where a person is willing to file all the returns and willing to pay all the dues, including interest, tax, penalty, and late fee. So that way, I think we can expect a permanent amendment, because this extension will carry on otherwise. The other important point is that you must have read about recent Calcutta High Court decision. I think Neha also discussed it, that the High Court held that mere cancellation of your party, your vendor, will not disallow the recipient or deprive of the recipient of the ITC. Now, what is happening is that these are a couple of High Court decision, but the department is actually disallowing the ITC. So you have to find out your vendors whose registration have been cancelled, and due to many reasons which are genuine, the registration have been cancelled, and ask them to please apply before 31st 2023 for revocation, so that you can at least argue that the vendor's application of revocation is pending before the officer, or maybe the appeal is pending before the appellate authority. That will be a sufficient ground to have an abeyance on the proceedings. Because if the matter of cancellation is not concluded, then obviously the officer should not or cannot proceed against the recipient. So therefore, it is an opportunity that you have 6 days to follow up with your vendors, so that they can at least file the revocation, and you can argue that the revocation is pending. In the genuine cases, of course. One of the recent cases I have seen, and I think one of the question which is asked on Q&A box is that, what if the vendor is unfortunately has died? So in that case, obviously, no one would have thought of revocating the cancellation, and registration was cancelled after non-filing of returns. So I think in such cases, I think that would be helpful that you follow up with the vendors. So this is the first positive thing. Now, Rule 10A, it talks about furnishing of bank details within 30 days of grant of registration, or before filing of first GSTR1, or before using the invoice furnishing facility. So basically, they want to have your bank account validated, verified that you are a genuine person before you take any action to transfer the ITC, or to enter into a fraudulent transaction. So that is how they have imposed a check on the taxpayers. Then there is Rule 21A, Sub-Rule 2A, which is also linked with Rule 10A, which we discussed in the last slide. So if the proper officer finds any anomalies, discrepancy in comparison of returns with GSTR1 or GSTR2B, or any other analysis as recommended by the GST Council. So the term any other analysis as recommended by the GST Council is not very well explained anywhere, that what type of analysis is recommended, and it has right now no legal backing of such. So we can assume that for now that they'll be comparing your returns with GSTR1 or 2B, and if they find anomalies, then they will issue a form GST REG 31 to ask you to explain why your registration should not be cancelled. And once they find any anomaly, they will forthwith suspend your registration and inform you. Okay. Obviously, there is a point that whether before suspension there has to be a natural justice or not, that has to be taken care of separately. But as soon as they find any anomalies and discrepancy after the comparison, they will suspend your registration and ask you to explain why it should not be cancelled. Now, earlier, this Rule 21A talked about comparison of 3B with 1 and 2B. Now it talks about comparison of returns. So they're talking about 3B, they're talking about maybe annual returns also, because returns will cover everything. I'm not going into the dispute of whether GSTR1 is a return or not, because that is not relevant here. But as far as the rules framing are concerned, they are talking about returns as returns 3B and annual returns in a normal scenario. Obviously, there will be different category of taxpayer for which 3B will not be the return and any other would be the return. So, your GST registration will be suspended on finding of anomalies, and it may be cancelled after if you fail to reply properly. Now, what is the repercussion of such suspension of registration? So you have to be very careful although the amendment is restricted to the anomalies and talking about returns and not just 3B. However, it is important to understand whenever it is suspended, because please understand they have set other analysis. So can it include analysis with respect to, say, if your GST R1 is showing 100 rupees, 3B is showing 90 rupees, they can suspend your registration, or they'll have to follow some other procedure. So there is a mixed match of provisions. We'll discuss that in later slides. But you have to be very careful about the repercussions of this suspension. So first repercussion is that you won't be able to issue any tax invoice charging tax. So therefore, you'll have to maybe issue a normal commercial invoice. You won't be able to file the GSTR 3B. So obviously, when you won't be able to charge tax, you won't be able to collect tax, and the other party would not be able to take the ITC. Even if you are mentioning GST, they will not pay. That will not be considered as a tax invoice. So therefore, first, you won't be able to issue a tax invoice. You won't be able to file the GSTR 3B or other return. Third one is you won't be issued any refunds under GST. So therefore, whenever any suspension has happened on any cancellation of your registration, you have to be very careful, be proactive, so that these repercussions, has no adverse impact. Obviously, when the suspension is restored, you can always issue a revised tax invoice in terms of Section 31, subsection 3, clause A, where you have issued a commercial invoice, because the GST law cannot deprive you of undertaking your business activity. They can only say that you cannot issue a tax invoice, but they cannot say you cannot do a business or make a sale or provide services. So after the suspension is restored, you can issue a revised invoice for your commercial invoices. Then Rule 9 and 25, the changes have happened in a sense that you must have also heard that there is a High Court decision, in fact, Delhi High Court decision, which held that undertaking physical verification in the absence of a registered person or his authorized representative or signatory is not valid under law. And therefore, and there was, in fact, the rule in Rule 9 and 25, where it was specifically mentioned that in the presence of the registered person. However, they have amended to conclude that the presence of registered taxpayer is not required before grant of the registration. The other amendment which has been brought in is that even if your Aadhaar authentication is done, physical verification can be conducted on two grounds. One is data analytics and risk parameters have shown that you are a risky taxpayer, and you can be a risky potential taxpayer, and or with the special permission of a proper officer. Proper officer would be an officer who is appointed by the commissioner in this behalf. So in such scenario, the physical verification will be done before granting the registration, even if your Aadhaar authentication is done. Then there is biometric based authentication and photograph of the applicant based on data analytics and risk parameter. This is right now being implemented in the state of Gujarat and Puducherry. Now I have written state of Puducherry because under the GST laws, it is considered as a state. However, under the constitution, it is a union territory with legislature. So that is why I have written state. So not to be confused with whether it is a UT with legislature or state. For the matter of GST, I have mentioned state. And in fact, in the notification itself, they have mentioned the state of Puducherry. So, so we'll have to ignore that part that it is a UT with legislature. Now coming to the automation and returns. Before discussing that, obviously these registration provisions, you can also understand that have been brought in to curb the menace of GST frauds. However, if you are a genuine taxpayers, I'm sure that you are facing this problem that your registration, the simple registration is taking more than 2 weeks, 3 weeks, more than 1 month, 2 months. In some cases, is it going 3 months? Proper officers are making undue demands. I'm not talking about the demands from a pecuniary side. I'm talking about demands from a documentation side itself, which is not even given in the GST rules. So I can understand that, and I think for some good to happen, I think some implication will also happen on the genuine person. Maybe after 2-3 years, when it is all streamlined, we can expect some relaxation. But even we are, as a consultants, are facing this problem in clients' GST registration, all these small matters where we also don't want to undertake, and we want our client to, easily go through these. Anyways, next, automation and returns. First of all, the annual return, if your turnover is up to 2 CR, you're exempt from filing the annual return in 9 for financial year 22-23. We also know that the turnover up to 5 crore is exempted from the annual return, the form GSTR 9C. They'll have to file GSTR 9, but they're exempt from filing the GSTR 9C. Next is late fee waiver amnesty is extended to for form non-filers of form GSTR 4, GSTR 9, and GSTR 10. Then Rule 64 and form GSTR 5A has been amended to track RCM payment by registered person on OIDR services. So you must be aware of the recent amendment in the OIDR front, that they have included those taxpayers or those foreign legal persons who are providing OIDR services even to a unregistered person. They are required to, file returns in form of GSTR 5A in India, and that will flow as the RCM liability for the registered person. So basically, if you are a provider of OIDR services sitting outside India to Indian unregistered person or Indian registered person, then you will be filing GSTR 5A. And for the registered person, they are liable to pay GST under reverse charge mechanism. And that will be, the government will be able to track the RCM payment through linking of this GSTR 5A and the returns of the registered taxpayers who are availing the OIDR services. Amendment in notice form GSTR 3A, which is actually issued for delay in filing of form GSTR 9 and 9A, which are annual returns. And this amendment only states that is sort of an intimation that please file the return in 15 days. Otherwise, you will be liable for penalty and other implications under the GST laws. Importantly, for tobacco, pan masala, and other specified product manufacturers, a new mechanism for registration of their machines under the GST laws and filing special monthly returns has been brought in. So there are total 6 forms: SRM 1, 2A, 2B, 3A, 3B, and 4. SRM 1 pertain to details of packing machines used for filing and packing of pouches or containers. For existing taxpayers already registered, they have to inform the details of these machines in form SRM on electronic portal within 15 till 30th August 2023. And for new registrations who will be dealing in these tobacco products within 15 days of grant of registration. For details of additional machines, installation of additional machines, you have 24 hours to inform in SRM 2A. For removal of existing machine, again 24 hours for SRM 2B. Input register, whichever you are purchasing, daily records to be maintained, and production register, daily records to be maintained in SRM 3B. And then there is monthly statement in SRM 4, statement of input and output on or before 10th day of month succeeding such month. So basically, this is a new procedure along with the existing filing of returns for the manufacturer of tobacco, pan masala, and other specified products. Liability mismatch in GSTR 1 and 3B. So this was brought in before by the after the GST Council recommendation, maybe prior to this meeting, Rule 88C, where if your tax payable in Form GSTR1 exceeds tax payable in Form GSTR3B by prescribed amount and percentage, which is, I believe, has not yet been prescribed, they'll intimate in Part A of Form GSTR GST DRC 01B and would ask you to either pay the liability along with interest through DRC 03 or explain the difference between GSTR 1 and 3B. So I think this is a part of automation they are going to bring, and after prescribing such amount and percentage, they'll start issuing this notices, which we'll discuss in other slide. Pertinent to mention that there may be genuine cases. Obviously, for example, you have omitted to mention an invoice in GSTR1. However, you have paid taxes pertaining to that invoices in GSTR3B. In the next return, now you are mentioning the omitted invoice in the previous one, GSTR1, in the next GSTR1. So your GSTR1 figures will inflate. However, in the next month, you'll be paying lesser tax liability in GSTR3B. So that is a genuine case. So I think you'll have to explain in Part B of DRC 01B. Other genuine cases may be typographical errors, where you have typographically made an error by inflating the tax liability in GSTR1, showing by inflating the taxable value, and you have to pay the less liability in GSTR3B. So that is also a second genuine case, but still you will receive this intimation in DRC 01B Part A. Interestingly, they have also brought in, after this GST Council meeting, the automation in terms of ITC difference, which is ITC reflected in GSTR2B as to what you have availed in GSTR3B, and they will prescribe such amount and percentage, which is the percentage of that difference. And if it exceeds that amount and percentage, intimation in Part A Form DRC 01 would be sent, again explaining either to pay differential tax liability with interest or explain the difference in Part B of DRC 01C. Now, this rule 88C and 88D is an automation process. Maybe, only after, will be implementing only after the amount and percentage is prescribed for the differentiation. Now, if you see Rule 88C, it talks about the recovery mechanism. For example, you explain that this is the difference, and the proper officer is not satisfied with your explanation, which is going to be the 99% of the cases. Then Rule 88C talked about, read with Section 75, subsection maybe 12, talked about the recovery mechanism under Section 79. And under Section 79, it was a recovery without any such intimation or show cause notice or order. So they have brought in a recovery mechanism by way of insertion of Rule 142B. They will give you an intimation in Form DRC 01D to say that please pay these taxes along with the interest, and you'll have to pay the taxes and interest against that Form DRC 01D. Obviously, if you're not paying that, then they will start the recovery mechanism under Section 79. Or difference in ITC in 2B and 3B, which is pertaining to Rule 88D, the recent rule, they will initiate a recovery mechanism under Section 73 and 74, which is a mechanism of DRC 01A and show cause notice DRC 01. So intimation is 01A, show cause notice is 01. So that is the recovery mechanism for Rule 88D. Now the impact of 88C and 88D is huge other than these recovery procedures. So taxpayers shall not be allowed to file GSTR1 or using invoice furnishing facility if additional GST under 88C or excess ITC under 88D is not paid, or reply explaining the reason of difference is not furnished. Now, please understand that Rule 59(6) was amended. So in clause D and talks about 88C, clause E, recently inserted clause E talks about 88D. So those two clauses are stating that the taxpayer shall not be able to file the GSTR1 or issue invoice using the invoice furnishing facility if additional taxes or excess ITC is not paid, or the reply explaining the difference is not furnished. They're not saying reply is not acceptable to the officer. So if you have furnished the reply, recovery proceedings shall be initiated if the officer is not satisfied, but you will still be able to file the form GSTR1. So you have to ensure that you do not miss the window of filing the reply explaining the reason. Because if you miss that, I'm not sure there'll be a window open after that 7 days of time on the portal and they will accept the manual reply. Because if that window is missed, you'll not be able to file the next form GSTR1. So you'll have to ensure that the reply explaining the difference is filed. Whether it is acceptable or not by the proper officer is different. But do not miss filing the reply explaining the reason, because that has a repercussions of non-availability of next form GSTR1, and your customers will be impacted, your business will be impacted. So that is all in front of from a standpoint of amendment in registration, automation, and return filing. Thank you very much, everyone.
Thank you, sir.
Thank you, Yogesh ji, and two other learned speakers, rather three learned speakers, Chetan, Neha, and Sweta. Are you all there? All other speakers, if you are available, then we can take some question and answers, and then we will summarize today's webinar. Can all other three speakers can open their video and confirm? Yeah, okay, thank you. Thank you. So I'm just going to question answers box tab and picking up questions from there related to the topic presented by each one of you. So you may reply to those queries which is being posted. There's someone asking question whether ITC is available on demo vehicle, which is resold after use, as demo vehicle is not original vehicle, but used vehicle. So maybe Neha can answer this from ITC perspective.
So ITC on demo vehicle is again a disputed issue. And recently there has been a favorable ruling where the AR has held that ITC will be allowed on demo vehicles if it is further supplied. So section 17.5 puts a restriction that only in specified situations ITC on motor vehicle is allowed. So for demo vehicle, there are varied positions or accounting treatment also. So generally a demo vehicle is supplied after 2 to 3 years of demo use by the dealers or distributors. So on demo vehicles per se, there is a restriction because it is not at first stage intended for further supply. But yes, when it is further supplied, so there is no bar, and depending on the situation, ITC on demo vehicle can be determined.
Okay. So coming back to Yogesh ji, there's one question asked by Mr. Dipen. If vendor involved in bogus billing from June 2020, so he's very specific that vendor is involved in bogus billing from June 2020. Before that, vendor engaged in genuine business transaction and SGST cancelled number from his GST registration from 1st July 2017. Can he file revocation application? The revocation application was handled by. Yes, please, if you can answer it.
So basically, obviously, there is no bar in filing the revocation of application, whatever be the stance of taxpayer. So they are not differentiating that if you are a bogus cancelled because of bogus billings, you won't be able to file the revocation. No, they are merely saying that you pays your dues, including interest, penalty, and late fee. Obviously, the taxation part will also be there. So if the bogus billings, the vendor has paid in a liability along with interest, penalties, and late fee and file all the returns, that vendor shall be able to file the revocation application. So there is no categorization of taxpayers that who can file and who cannot file.
Okay. Chetan, question to you, which is being asked by Mr. Raju Gupta. And this is basic question. He's asking where we can find, if any, notice, deficiency memo, or something else issue against our GST number. Can you guide him where they can find out?
Sir, this is available in the refund application tab on the GST portal.
Okay, but if you can generalize this, that why only deficiency memo? There are so many notices which is being uploaded on GSTN portal against any GST registration.
These notices there are two tabs on the GST portal. One is notices and orders, and other one is additional notices on orders. So in these tabs, the notices are generally reflecting.
I think now we have to do one technical session for this also, for all trade members to know where they can go on GSTN portal and check it out. Nevertheless, Sweta, for you, I'm not finding any question, but one question which I'm creating. Yes, online gaming now, irrespective of fact, whether game of skill or game of chance, how do you foresee, because SLP is being filed in the Supreme Court against Gamescraft, Karnataka High Court judgment. What is your takeaway looking at the amendment made in CGST amendment bill and IGST amendment bill? What is your personal take? We are not officially discussing anything, but what is your take?
So definitely all these distinctions that were created so far, they were on the basis of the constitutional validity of the power of the states to tax all these transactions of games of chances or games of skill. While constitutionally games of skills cannot be taxed, but now this is a taxation matter. In case of a taxation matters, definitely regulatorily, the state governments are not empowered to make any laws relating to the regulation aspects of these things. But when it comes to taxation, state governments have equal powers. So this is something the Supreme Court, has to see how it is going to take the constitutional validity of the state's power. So we are yet to finalize, and the hearings are also yet to start. So it's a long way to go.
Okay. Chetan, question for you. Unutilized ITC export refund. So they are talking about that Rule 89, read with 54 subsection 3. Is there any time limit for inadmissible ITC for recredited in credit ledger?
Well, generally, if the refund is rejected by the department, so if we see the relevant rule, there is no time limit they have provided for filing PMT 03. So within any reasonable time, it can be filed. And
but they are generally, what we have seen in the trade, they are not recrediting automatically.
So we have to file this.
Okay, please complete.
So generally, they are not recrediting automatically, but we have to file PMT 03, and it can be within some reasonable time.
Okay. So coming back to Neha, I saw one question related to Neha. Just a minute, I forgot. I just saw it. I was scrolling that question answers, many questions there.
Yeah.
Just let me. There's a question from Maya. When we make a sell and pay GST, but buyer claims ITC, but does not pay, what option seller have? She's simply asking that as a purchasing dealer, we have paid the amount to the supplier, and supplier ultimately is not depositing. what option we have. It is critical for all of us, for all purchasing dealer. And now there's dispute coming from Asta Enterprises, Patna High Court. What will be your suggestion?
So if all act has been done by like recipient taxpayer, and beyond all the control, supplier is even not paying taxes or he's not traceable, etc., we can't take the certificate, the mechanism which circular has provided, etc. So there are some mechanism, there are some mechanism to verify tax payment by supplier, like 3B filing status, etc. But beyond a point, if it is not filing or we have no control on the supplier and we are not able to prove that yes, payment has been made by him, then the resort is to litigate the matter basis challenge to section 16(2)(c) condition only.
But Neha, practical problem which is happening for all purchasing dealer. See, we all consultant along with the taxpayer will agree to that buying dealer, purchasing dealer, who is a recipient, has paid the amount to the supplier. Until 2A came into the picture, at least this recipient was not aware that this supplier, even after collecting the tax, is not depositing the tax. One question. Second question, I'm not going into Asta Enterprises, Patna High Court ruling. I'm just trying to visualize a situation. How recipient, purchasing dealer, who is a genuine and bona fide, can be penalized for non-payment of taxes by the supplier even after collecting the tax. Even 2A has come into the picture since, let's say, beginning of 2019. You can't say, because 2A is sacrosanct. Maybe some supplier is filing their one with the 5 lakh rupees and paying 5 lakh, but they are actually having liability of 10 lakh rupees. So their status would be coming, they have filed. So this buyer will not come to know whether his invoice is actually included by the supplier while disclosing GST R1 and 3B. This is a second problem. Third, you rightly picked up in your presentation doctrine of impossibility, that if something which is impossible, you cannot compel the purchasing dealer to cross-check and verify. Then what is the need of it? See, ultimately, these suppliers are agent of the government. They are collecting the tax. They are supposed to deposit with the government exchequer. Why this is being, put on the hands of recipient and their credit is being denied? And subsequently, 2-3 questions which is again coming out. I wanted to see that in your presentation, you could have discussed section 41, subsection 2, read with rule 37A also, that reversal from the recipient can be demanded prospectively only from 1st October 2022. They can't demand reversal for the past period. And this is what I did not see in the Asta Enterprises Patna High Court judgment. Now, coming back, another point which trade is saying and asking, trade is saying if this is going on, then it's better. Give me a window. I will deposit the tax in supplier's GST number so that tomorrow there will not be any dispute. Are we going back with the basic, GST structure that supplier is going to be agent of government and he's not depositing? What does recipient? He has paid the amount and his credit is being denied, purchasing dealer. So I hope you will agree with all these pointers when this question is being asked.
So I agree to all the concerns, and there are genuine concerns only. We can't like go away from the reality that yes, there is an issue. Recipient is being caught for any default of supplier in this case. So like you said, that rule 37A mechanism has been introduced, that reversal has to be made and then thereafter reclaim can be done. But that rule is prospective. But before this rule also, because 16(2)(c) condition was there since beginning only. So we can't say that yes, reversal need not be made for the past period. Reversal was there for the past period because of the substantive condition in the act. Even though there was no proper mechanism to reverse it, there was no proper mechanism for recipient taxpayers or the purchasing dealers to verify that payment. So in all these circumstances where there is where all activities have been done by recipient and it is ultimately beyond his control, he can't take certificates, he can't verify, he can't go beyond supplier, etc. Then 2-3 possibilities is that commercially they can recover taxes from the supplier. That is also again one of that may also become impossible for the past period. For the future, yes, recourse can be taken in commercial contracts, but for the past periods, it will be a pain. And the ITC claim will need to be litigated. ultimately it will be need to be litigated because recipient has all the things in his hands. But beyond a point, because of the condition in the act, we can't go away from that condition which is there in the act. And
Neha, I'm only making a point that if reversal is required even prior to 1st October 2022, as per section 41 subsection 2, then what is the need of bringing this change in 41 subsection 2 demanding reversal from the recipient? I'm only making a point. Yes, it is a condition to avail credit, but there was no corresponding provision for the reversal. Right?
True.
So,
that mechanism was not there for the reversal, and also there was no explicit provision for reclaim also.
So I'm only saying that these are the provisions need to be tested. And yes, we all are talking about doctrine of impossibility. We are talking about no fault of recipient and buyer, why he should be penalized for this. For that, we are having no mechanism as on date. And there are ITC machinery provision, which was envisaged in the beginning, 37, 38, 39, 41, 42, 43, 43A. We never did implement all these provisions. Why this purchasing dealer gets penalized? Nevertheless, I'm coming back to Chetan. There is one refund related. Then I will come back to Yogesh, and last question to Sweta, so that we can finish up by 1:30 today. There is some anonymous attendee. I don't know. He has not put in his name, but he's asking that bank account details registration, whether should give all bank account details. Maybe Yogesh can answer it. Rule 10A reference. We have to furnish the bank account details. So in case they are having 3 bank accounts, are they supposed to furnish all 3 bank accounts?
No, you can furnish your one bank account. No need to furnish all 3 bank accounts.
But what happened in case he's also running all 2 other accounts and taking the money in that bank account also?
So I don't think that even in that cases, registration in the registration, you need to mention that bank account, even if your billings are being, receipts are being coming in different bank accounts. I think bank account detail is, the purpose of bank account detail is to establish the genuineness of the taxpayer further. Let's suppose you have registered a bank account number, but you want to pay a liability from a different bank account number. So in that case, you can mention the different bank account number, but there is no mandate that you have to mention all bank account numbers, whatever you have in different banks. So there is no mandate. Yeah.
Yogesh, don't you think they have made this provision to ensure that all the receipt in the bank accounts is being captured in GSTR1 and then corresponding liabilities being paid through 3B? Is it not the intention? If it is the intention, then all the bank account details must be furnished. Otherwise, what happened? I may have 3 bank accounts and I'm only disclosing pertaining to 1 bank account, and 2 other bank account is never being captured.
So Bimalji, respectfully, this is my submission that that cannot be the intention, that they want to capture all the bank receipt, because bank receipt does not necessarily means that it pertains to supply. So in my personal humble view, I don't think the intention is to capture all the bank receipt, and that is therefore you have to mention all the bank accounts. So if one bank account is mentioned, I think there is no rule that it will be a non-compliance.
Not an issue, Yogesh. We can agree to disagree also. There is no problem for that. And consultants are mean to create such agree to disagree. Nevertheless, I just raised the concern. Sweta, don't go away. Last question with you.
No.
Before that, Chetan, he's saying refund formula. Client having exported goods and services, exported goods with payment of tax, IGST, services without payment of tax, refund formula, services without payment of tax, refund formula should add goods value in numerator, which was paid for EWP. If to be added becomes reducing refund amount twice, please clarify an alternative. I'm not clear. Can you check and reply?
What I can understand in this case, client is exporting the goods on payment of tax and exporting the service without payment of tax.
Okay.
So in respect of goods exported on payment of tax, refund amount will processed automatically. But for claiming the refund on account of export of service, application needs to be filed in, and the refund amount has to be calculated as per the formula provided in Rule 89(4). In that, in the numerator portion, we have to mention the value of goods exported and the value of services exported, and in the denominator we have to mention the value of aggregate total turnover. So while calculating the numerator part, since in this case export was made with payment of tax, export of goods was made with payment of tax, that will not be considered for the numerator portion. However, for the denominator portion, that is aggregate total turnover, the law provides that the total turnover in a state shall be considered, and that includes turnover of goods also, which is exported on payment of tax. So that has to be included. And here one more thing, that the net amount, net ITC amount, which is to be considered in this formula, is the total ITC amount that may have been used for discharging the tax liability on the export of goods also. So that may result in excess or lower. There can be various permutations and combinations, but yes, as per the law, as per the formula, and as per the definitions, the amount of value of goods exported on payment of tax need to be included in the value of aggregate total turnover and not in the numerator as mentioned in this query.
Okay, thank you very much. Last question to Sweta. Sweta, what is a way forward? Casinos, Goa. What is your take? It will survive because Goa and Sikkim is the state. They have, objected in 51st GST Council meeting. They talked about valuation also for casinos, though you have said the first chip value. So what happened, winning coming from the first game, then again redeployed for the subsequent game? If you can just clarify for the audience.
Okay. So as I started, gambling and all these are habits, and old habits die hard. Okay, so how much ever hue and cry, that is going to continue in the industry. Even if there is going to be increase in the taxes, if a person is habitual of playing, and once a person gets that taste of winning, the quantum of winning may be less, but this industry is here to, it's here to stay. So I don't see that it is going to be like a hamper.
Thank you. Just 1 minute to each one of you. 1 minute to just summarize your pointers, way forward, whatever you want to say to the audience, because there's a large audience today. We got 500 plus audience today. It was YouTube live also. So all of you has got good and big opportunity to present yourself before the big audience. And I'm damn sure that you must have liked that you got good audience to listen to you, to watch you. So this is a really way forward for each one of you, including me as well. So starting with Chetan, 1 minute for you to summarize in case you want.
Sir, I have discussed on the topic of refund, and the law is very new, and there is a lot of doubts and lack of clarity regarding the legal provisions, and department obviously try to release as much as less refund amount they can. So in most of the cases, they try to either reject, withhold, or reduce the refund claims on the basis of some previous reasons or citing some provisions. There is no direct clarifications. How with the clarifications issued by the department and the judgments coming out, there is the possibility that this area, this rejection and withholding of refund will get reduced in the future, and this will also avoid the litigation also.
Okay, Neha. Neha.
Yes. So my summarized points and way forward would be that ITC, we all know that has been a major thing in GST. On every transaction, we need to determine whether ITC is allowed or not. Irrespective that government has always intended for the government has always intended for seamless flow of ITC. So considering the issues we discussed, the way forward could be that there are a lot of automations that has been done on the government portal. That is a positive side from government. So a lot of automations, lot of intimation notices that they're targeting 1 versus 3B, 2A versus 3B, and seeing the compliances of some compliances of supplier on the portal itself, like verifying GST1 status, 3B status, and also a facility for seeing the comparison of 1 and 3B of supplier itself. So maximum possible what recipient can do is that they can ensure verifying all the compliances of supplier which are there on the portal to minimize the litigation or to minimize the doubt of genuineness at their end. So that is there. And apart from that, if there are genuine cases and beyond the control of purchaser, and so then the matter needs to be litigated only. And for complex transactions, like where there are doubts that whether ITC will be allowed in light of the restrictions under Section 17(5), that need to be determined carefully.
Okay. Sweta, for you, 1 minute. Apart from your topic, also you can speak.
Yes. So maybe definitely not on the online gaming industry, but generally I feel that now that the time limit for issuance of show cause notices for 17-18 period is about to come to an end, September end. I've seen that there are so many DRC01As that are getting issued on without any basis, without any reasons, giving very minimal time. So 3 days is what we have seen generally that they are giving for you to give any response. My suggestion to all these people, all the members, is that don't take DRC01As lightly. The way the department, the way these the government is trying to, take the money, is that they are actually going to any extent to extract the taxes. The authenticity, the correctness of the issue is secondary. But on the first hand, please reply to all these DRC01s in time, and at the same time ensure that you are asking for proper timelines whenever you're asking for any extensions.
Okay. Yogesh ji.
Yeah. So my address would be in the extension of what Shweta has just mentioned, that I'll share my experience. So these audits, notices, ASMT, scrutiny, investigation. So actually these are being done mostly in violation of the timelines, in violation of whatever the provisions are mentioned. Audits are being completed after 1 year, 2 year, which is violation of the timeline given in the law. ASMT 10, they are asking for informations which they are not required under 61. Then basis the ASMT 10, they are issuing DRC 01A, except what was mentioned in ASMT 10, and then they are issuing DRC 01, except what was mentioned in DRC 01A. So that has been the case in my experience, that they are violating these basic principles which are given under the provisions. So you have to ensure that beyond that timelines and all, you have to ensure that you must put a clause, put a submission that on these grounds, your audit report, your ASMT 10, your DRC 01A or 1A is invalid. Because if you do not challenge at the first instance, it may happen that at the appellate authority or tribunal level, that they may not accept your additional ground. So you challenge the basic fundamentals first, and then you proceed with the merits.
Thank you. So before saying goodbye to each one of you, to all the participants, all the speakers, 4 speakers has done well, and excellent presentation by them. So kudos from my side to all the speakers. I hope all the participants has liked the presentation by all the speaker. You can always write some word of appreciation for them in question answers tab. That will motivate all the speakers to come forward with a different topic and different presentation in future also. We have tried our best from IDT committee, PhD, CCI to give our best and keep you updated with the recent changes in GST law and legal jurisprudence. I'm thanking my secretariat team, Mr. Nanda Mishra and Dr. Ranjit Mehta for taking all initiative from PhD, CCI, thanking all knowledge partner as well as institutional partners, ICSI, Institute of Company Secretaries of India, Institute of Cost Accountant of India. And of course, thanking each one of you is very, very important because you have taken out your time. Today being Friday, working day, you have joined the program and watched throughout last 3 years continuously. You were with me and with our team. So I'm sure this presentation must have added value and value addition for your day in, day out compliances in GST law. And look forward that you continue to watch all the program of IDT Committee PhD CCI. With this, let me say thanks to each one of you. Thank you very much.
Thank you.
Thank you.
Yeah, everyone.